Hello. Very good morning, everyone. How are you all? Everyone fine? Chalo. Now, last class we have done only the introduction of Indias. Correct? Any doubt in that? Introduction of Indias, any doubt? No doubt. So it means you have understood for which companies Indias will be applicable, for which company Indias will not be applicable. Correct? Means normally in CA final will deal only with companies. Correct? Means whatever the question will be asked that will be related to companies, and from exam point of view, even though question is silent, you need to apply India's only. Means if they have given some companies without any net worth, then also you need to apply what? India's only. So any question of whatever nature, you need to apply India's. Correct? Yes, sir. Last class we also started India's 37, but we have not yet done any points of India's 37. What is India's 37? Provision, contingent liability and contingent asset. We started this chapter with a definition of what? Contingencies. Contingencies definition is not given under India's 37. The definition was given in AS4. So I said let us first start with CA inter. See what we actually know from CA inter. Correct? What definition I have given? Contingencies are any condition existing on balance sheet date, the outcome of which is not known, which may be favorable or unfavorable. Favorable. The outcome is dependent on the happening or non-happening of uncertain future event, which is not within the control of entity. It means last class we have done the only definition part without any explanation. I have not explained it. Correct? But more or less you have understood that this is the meaning of contingencies. Correct? Let me take one example. I will say a live example to give you the exact explanation of contingencies. Okay? So I said, means I started with the example, then time was over. Let us once again start the example. I said you passed what? 12th exam. You passed 12th exam. Correct? So you opted for what? CA. One of your friend who also passed what? 12th exam has not opted for CA. So they will do what? Plain BCom. Correct? They will do only BCom. You are also doing BCom. But I know what you are doing in BCom. Means your main target is what? Chartered accountancy. Correct. So you opted for CA and one of your friend has registered himself for BCom. Understood? Correct. Now on the date of registration, means once you registered for CA, can you see there is one contingencies? Contingencies means some condition is existing on balance on that particular day. Once you have registered for CA, there is some condition existing on that particular date which arises because of registration with ICI. Correct? But the outcome of that condition is not known to you, whether you will become or whether you will not become CA. Means whether you will pass CA foundation or whether you will not pass CA foundation. First exam is CA foundation, na? Correct? So on that day you don't know the outcome. Can you say it is dependent on happening or non-happening of uncertain future event? Whether you write CA foundation exam or whether you will not write CA foundation exam, that is uncertain right now. Even though you have registered, but many students do not write exam only. Correct? It depends upon uncertain future event, and which is not within the control of, it is not in your hand. You can't control that event. You can't control that event. So can you say with registration either with ICI or any degree college, there is some condition. So can you say this also has given rise to some contingencies in your life, either in the life of in your life or in the life of your friend. Correct? Understood. So just try to understand. I'm just taken a real life example to give you the explanation regarding contingencies. So can I say on this date, on the date of registration, there is some contingencies. Now from your point of view, can I say you need to react due to such contingencies? React means you need to take some action because some condition is existing in your life. You need to take some action or not. So how to take action, that we need to understand. So can I say you will think about what is the probability of passing CA foundation exam. You will think about a probability of passing CA foundation exam. Till now you have not done any preparation of CA foundation exam. On the date of registration I am asking. Till now you have not received ICS study material also. I hope you are understanding. But on that date, can I say you will think about the probability of passing CA foundation exam. So you will see the past experience of other student, past experience of your friend or other student. Correct now. As per that past experience, your past result of ICI, you will feel that probability of passing CA foundation exam is high or not high. But you need to search now. So what is the probability of passing CA foundation exam? Can I say it is not high? It is not high now. Means probability of not passing the exam is high. Bolna yes or no? Probability of not passing the exam is high. Have you understood? So can you see, due to that contingencies, whatever is existing in your life, you take some action. Action depend upon some assessment, and what assessment you have done, the probability of not passing the exam is high. Therefore, you need to take some action. You need to take some action. What action you will take? Can I say you will take coaching class? Even though ICI is a corresponding course, ICI never says that you take some coaching class. ICI will not say na, but can I say you will take some action and you will take some coaching class in a good academy. In a good academy. So guys, this is nothing but a provision you have created. You have created a provision or not. By taking a coaching class, you may prepare for the examination and then you may or may not pass. Then also it may or may not pass. But can you see you have taken some action or not? Why you have taken action? That you know that probability of passing CA exam is not high. Yeah, probability of not passing the exam is high. I hope you have understood. So can you see this, whatever example I have taken from your life, this is nothing but contingencies existing on that particular date, the outcome of which is not known, which is dependent on uncertain future event, which is not within the control of your means, it is not in your hand. Understood? So can you see in our real life also we create provision? Why you have created provision? Because you know that probability of passing the exam is not high. Have you understood? And you have taken coaching class, but you have created provision. It does not mean you will pass. Even though you have created provisions, it may or may not result in favorable situation. It may or may not result in favorable situation. I hope you are understanding. Let us come to the life of your friend. He has registered himself for what? BCom exam. Now he will do also some assessment because in his life also there is some contingencies. Correct now. So what assessment he will do? What is the probability of passing BCom exam? Can I say very high? I will say all students pass without writing in exam only. They will write and they will come and they will pass. Correct now. The probability of passing BCom exam is very high. Whether they will take any coaching, they will not take any coaching class. If suppose they also think that probability of passing BCom exam is not high, so they will also take coaching. Means if I compare BCom of, if I come to the BCom of Delhi University, so there are many students who take coaching class for BCom also for Delhi University. Because there it might happen because the standard of BCom exam is very high in Delhi University. So can it depends upon assessment? I hope you are understanding. But normally for BCom exam, you also know that no one take coaching class. Why they don't take coaching class? This is also one examination and it is also an important examination. BCom exam is also an important exam for your life. Bole yes or no? You can do masters only after BCom. If you want to do MBA, so you can do MBA only after bachelor degree. I hope you understand. This is also one of the important exam. You can't say that this is not an important exam. It's also one of important exam, but then also you will not take coaching class because you know that probability of passing the BCom exam is very high. So can you see the action depends upon what is the probability? Have you understood? Have you understood this point? Yes, sir. So can I say a simple example I have taken for contingencies. So contingencies can come in anyone's life, and whenever there is a contingency, we need to take some action. The action is nothing but whether we should create provision or whether we should not create any provision. Have you understood? Let me take one more example. Correct? Only for better understanding. Let me take one more example. Suppose this is your what? Home. This is your home. And today is exam day. Today is exam day. Exam day is CA final, financial reporting paper 1. Exam day. And you are ready for exam. You are ready for exam. And you are 100% confident that you will score 90 plus in CA final FR paper. Correct? Have you understood? Means you are already prepared for the exam. And you are ready and you are starting for examination hall. Means you need to go to exam hall now. And your exam hall is, let us assume it is at a distance of 1 kilometer. Exam hall is at a distance of 1 kilometer. Correct? And you will travel this 1 kilometer only by walking. Means you will not take any public or private transportation. Let us put some condition here. Let us assume that there is some strike. You do not have any private transportation. There is no public transportation. You don't have any friend also. No one is there. Means you need to go only by walking. Have you understood? Correct. So it means you need to go walking 1 kilometer. Then only you can write exam. Then only you can write exam. Have you understood? Correct. Have you understood? But what happened? The moment you started for exam hall, you have observed that there is black cloud. What cloud? Black cloud. Understood? Means you observe that there is some clouds appearing in the sky. Understood? Can you see this cloud is nothing but some condition existing on that particular day? Cloud is a condition existing on that particular day, the outcome of which is not known. Whether rain will come or rain will not come, that we don't know. That depends upon uncertain future event which is not within your control. 1 second there is a contingencies or not. 1 second there is some contingencies. I've just taken a very simple example to give an expression of the definition of contingency, so that you can apply this contingency definition in accounting also. Are you able to understand what I am saying? So due to this black cloud, there is some condition existing on that particular day, the outcome of which is not known, which is dependent on uncertain future event, which is not within your control. Condition satisfied, you need to take some action. For action, you need to do the assessment of that condition. For assessment, you will go to Google Baba. You will see weather report. Google Baba you have now. You have Google Baba. You will see what is the weather report of current, as per current circumstances, and as per Google Baba, in your locality there is a high chances of rain. There is a high chances of rain. Understood? You search Google Baba. Google Baba is saying that in your locality there is a high chances of rain. Have you understood? What action you will take? You will use umbrella, you will take umbrella. You will use umbrella, you will take umbrella. So you have taken umbrella. You have taken umbrella, it does not mean you are using umbrella. Means you have created one provision, you will take umbrella and you will use it umbrella only once rain will fall. Are you able to understand? Means creating provision does not mean you are using provision. You will use provision only when that event occur. Are you able to understand? So you are taking umbrella, it means you have created provision. Why you have created provision? Because as per current circumstances, the probability of rain is very high. Probability of rain is very high, so you have created provision. Have you understood? Simple thing na. If I change the circumstances, in this particular example. Same example I am taking, same situation is there. There is a black cloud, but with black cloud, wind is also flowing. High wind is also flowing. So it might happen the cloud is shifted from one place to another place, quite possible. But right now there is a black cloud. So once again you do the assessment of current circumstances. You'll go to what? Google Baba. Now Google Baba is saying due to wind there is a less chance of rain in your locality. Quite possible. There is a less chance of rain in your locality. Quite possible. But there is a black cloud. Means there is a condition existing on that particular date, but as per Google Baba, there is a less chances of rain in your locality. Can you see it is always better to take umbrella? It is always better to take umbrella. Means it is always better to create provision, but unnecessary will not take umbrella, na? If there is a less chances, to unnecessary will not take umbrella. Are you able to understand what I am saying? But what I am saying, it is always better to take umbrella. But unnecessary will not take umbrella, means unnecessary we should not create provision. So if you are not creating provision, what you will do? If you are not, suppose if you are not creating provision, so you should do something apart from creating provision. So what you will do? You will disclose this information to your parent that we are going without umbrella. If rainfall come and save us, bolo yes or no? This is nothing but you are disclosing the fact. You are disclosing the fact as contingent liability. You are disclosing the fact as contingent liability. Bolo yes or no? If you are not taking umbrella, you will disclose this fact to your parent or not? Papa, I am going to my exam hall without umbrella because there is a very less chances of rain. I am saying it is always better to take umbrella. If you are taking umbrella, goods, nothing to disclose. But if you are not taking umbrella, it is better to disclose the fact to your near friend or relative. I hope you are understanding. So it means when you are not creating provision, you should disclose the fact to the user of financial statement as contingent liability. Means can I conclude that both provision and contingent liability arises from contingencies only? Both provision and contingent liability arises from contingencies only. Means they are not different. They are from contingencies only. If there is contingencies, either you need to create provision or you need to disclose the fact as contingent liability. This you have understood. Means let me further explain it. I hope this much you have understood. One thing we have understood, that we are discussing about outcome. Means whenever there is a contingencies, we'll think about outcome. Outcome which may be favorable or unfavorable. Correct? So this outcome may be favorable or unfavorable. Bolo yes or no? Correct. My question to you all, this outcome is due to some condition. Condition is arising from past event or future event. Past event means this outcome arises from this outcome is due to condition. Due to condition arising from conditions arising from past event. Have you understood? Now, if I am saying the outcome is favorable, if I am saying outcome is favorable, favorable means can I say expected income? Can I say expected income? When I say expected income, income will include gains also. Income is a wider term. There is no need to say income or gains. Income always include gains. Correct? When I am saying income, expected income, the income will include gains also. Have you understood? When I am saying favorable, it is favorable to entity, means there is a expected gain, and this gain will arising from past event. Correct? Now, it means whatever we are discussing which principle? Conservatism principle. Means right now we are discussing what? Conservatism. Bolo yes or no? What is the meaning of conservatism? What is the meaning of conservatism? First, what is the meaning of conservatism? Conservatism means what? Know about conservatism, na? We do accounting based on conservatism, prudence. We should be prudent. What is the meaning of conservatism? We should provide all expected expenses. We should not anticipate any expected income. Means we should not recognize any expected income arising from past event. Arising from past event. Means conservatism, whatever we are applying, this is applied on expected expenses and expected income arising from which event? Means any expected income, any expected expenses arising from future event will never be recognized. Will never be recognized. Means if I am saying any expected expenses arising from future event, whether you recognize it, on that we never apply conservatism principle. So we apply conservatism principle only on expected income and expected expenses arising from past event. Arising from past event. I hope you are understanding. Bolna yes or no? Correct. So expected income. So will you recognize it? So can I say do not recognize? Do not recognize. When I am saying recognize, what does it mean? Do not recognize, what does it mean? When I am saying do not recognize, what does it mean? First, recognize means what? Do not record in your books of account. Don't pass any journal entry. So when I am saying do not recognize, it means do not record. Do not record in your books of account means don't pass any journal entry. Don't pass any journal entry. So do not recognize. I hope you have understood. I hope you have understood. Correct. So favorable, can you say any favorable situation as per conservatism, whatever you have done in CA Inter till now. Right now I am not came to CA final. I have not started India 37. Huh? I am discussing whatever you have done in CA Inter. Correct. So can you say any favorable situation means any outcome which result in favorable situation arising from past event, do not recognize, ignore it from accounting point of view. Correct. Now coming to unfavorable. Unfavorable. Unfavorable means what? Expected expenses. When I say expenses, it will include what? Losses. So when I am saying expenses, expenses will include all losses also. Got it? Correct. Now expected expenses, there can be two situations. There can be two situations if it is probable. Probable. When I am saying if it is probable, probable means chances are more than 50%. Chances are more than 50%. Means when I am saying probable, probable means chances are more than 50%. Correct. If it is probable and what? And amount can be estimated. Amount can be estimated. Means can I say what will be the outflow due to such unfavorable situation that can be understood only when that event occur? Which event? Future event occur, uncertain future event occur. Therefore we right now we don't know the amount of expenses. If you don't know the amount of expenses, we need to estimate it, and if you can estimate it, then you should create what? Provision. Understood? So if the outcome is probable and amount can be estimated, can I say recognize provision? Recognize provision. Have you understood this point? a recognized provision. Correct. Or if I say in other cases means, when I am saying other cases, it means what? Either outcome is not probable, or amount cannot be estimated, or both conditions not satisfied. So it become other cases. So in other cases, we'll disclose the fact as what? Disclose it as contingent liability. Contingent liability. Got it? Have you understood this point? I think more clear understanding is coming about the definition of contingencies. Correct. Now, it means one thing is clear, that when we are coming to the recognition, we recognize only expected expenses, means unfavorable situation. Unfavorable situation. So, can I say in this way, when I am saying expected expenses, or if you want to write on losses also, expected expenses or losses arising from which event? Past event. This is keyword. This is keyword. Normally students do not understand past event. They think about any event. So expected expenses due to some condition existing on balance sheet date which arises from past event. We are discussing about that expenses. We are discussing about only those expenses. Means any expected expenses due to future event, ignore it. We never record that type of expenses in our financial statement, current year financial statement. So can you see, these expenses may be due to two reasons. Either due to decline in the value of what? Assets. Either decline in the value of assets. Correct. Or due to increase in the value of liabilities. Increase in the value of liabilities. Am I right or not? Either it will be due to what? Decrease in the value of asset, or increase in the value of liabilities. Can you see, when I am saying increase in the value of liabilities, it means there is some outflow of resource. Outflow of resource. Outflow of resource. Correct. Outflow of resource. Have you understood? So when I am saying increase in the value of liability, it means in future there will be some outflow of resource to settle such contingencies existing on balance sheet date. Correct. So can you see, on this outflow of resource we apply Ind AS 37. Means Ind AS 37 is applicable only for this outflow of resource. Have you understood? Means either it will be what? Either it will be provision or contingent liability. Either it will be provision or what? Contingent liability, depending upon circumstances. Depending upon circumstances. Either it will be provision or contingent liabilities. Have you understood? Correct. Can I say it means this provision is nothing but liability? These provisions are liabilities or not? Bolo yes or no? Even these provisions are liabilities. Why it is liability? Because it will increase the value of liabilities only. It will result in some outflow of resource. So these provisions are liability or not? These provisions are liability. So can you say these provisions are liabilities? So can you say whenever we say provision, provisions are liability or not? Provisions are liability. So can I conclude all provisions are liabilities? All provisions are liabilities. अरे बोलो ना. React. React. Either say yes or no. If you are not understanding, sir, no. Bolo. Correct. So can you say all provisions are liabilities, but all liabilities are not provisions. So all provisions are liability, but all liabilities are not provisions. Understood? Detailed discussion will be done. Don't worry. But have you understood this much? Correct. Now coming to what? Decline in the value of asset. When I am saying decline in the value of asset, so decline in the value of asset does not result in any outflow of resource. No outflow of resource. It will not result in any outflow of resource. It will not result in any outflow of resource. So can I say no outflow of resource? No outflow of resource. If I am saying it will not result in any outflow of resource, it means it is not a liability. It means not treated as liability. बोलो ना. Not treated as liability. Correct. Have you understood? So any decline in the value of asset due to some condition existing on balance sheet date arising from past event is not a liability. Can you say it is only an adjustment to asset? It is only an adjustment to asset. So it will be considered as what? An adjustment to asset. And such adjustment are known as impairment losses. A new term in your life? New term in your life or not? Bolo yes or no? Impairment losses. Such adjustment to asset is known as impairment losses. Got it? Means can I say due to such conditions existing on balance sheet date, any expected losses which arises from decline in the value of asset is known as impairment loss. I mean to recognize such impairment loss also. We to recognize such impairment loss also. But as per which AS or Ind AS? Can you say to such losses AS 29 or Ind AS 37 is not applicable? So we are not discussing about this under Ind AS 37. Ind AS 37 only deals with what? Outflow of resource. So Ind AS 37 only deals with outflow of resource. Are you able to understand? Means let me come to this impairment losses. We need to discuss about various assets. So let me start with inventory because you know inventory. बोलना रे. So inventory, can you see which Ind AS will be applicable? Ind AS 2 coming soon in your life. Means AS2. Ind AS2 and AS2. Right now I will only mention Ind AS. I will not mention AS. Otherwise confusion will start. However, I can also write on AS because you know AS2. Correct. Now in AS2 you have done cost price or NRB which will lower. Why you have done cost price or NRB which will lower? To decline. Because there may be some decline in the value of inventory. Are bola re? If NRB is lower than cost price, we write down the value of inventory. This is nothing but impairment loss. Nothing but impairment loss means expected loss. Expected loss. Bolo yes or no? This is nothing but expected loss which you are recognizing. Already we have done in our CA inter. Already we have considered this point in CA inter. But can you say that also arises from contingencies only? That also arises from contingencies only. Correct? Understood? Second, if I am saying property, plant and equipment, PP, you know PP? PP means what? Property, plant and equipment. You know about PP because AS10 was also property, plant and equipment. Or you can say IA. IA means what? Intangible asset. Intangible asset. Or you can say IP. IP means what? Investment property. If you don't know, write down full form. Property, plant and equipment, intangible asset, investment property. Property, plant and equipment, intangible asset, investment property. Correct. Can you say there may be some decline in the value of such asset also? Decline in the value of such asset is also known as impairment loss, and that impairment loss was covered under AS 28, which was not a part of your syllabus in CA Inter, and therefore you don't know about AS 28. But now it will be covered under Ind AS 36. Ind AS 36. Ind AS 36. Have you understood? Correct. Now, how to calculate that impairment loss, that we'll discuss in other chapters. Means when we'll come to Ind AS 36, then only we'll discuss now. Means I am just right now explaining you that this impairment loss is also arising from what contingencies only. Means we are applying conservatism principle, but it is not covered under Ind AS 37. It is not covered under Ind AS 37. Why it is not covered under Ind AS 37? Ind AS 37 says that only outflow of resource will be covered. Means provisions are liabilities. Provisions are liabilities. Correct? Yes, sir. Now coming to one more asset, which is known as financial asset. A new term in your life, financial asset. First time you are listening this term, financial asset. Financial asset. In simple word, we can say receivable. Any receivable. Means data is one example of financial asset. Data is one example of financial asset. Correct. For data, we used to create provision for doubtful debt due to conservatism principle. Means due to some contingencies. Due to some contingencies arising from past event. Only yes or no? Have you understood this point? So this provision for doubtful debt, whatever you have created for receivable, whether it is a liability, whether it is a liability, it is not a liability, means it is not a provision also. It is not a provision now. I hope you are understanding. The provision for doubtful debt is not a provision only. So can you see, it is not a correct term. Provision for doubtful debt is not a correct terminology. We should call it what? Impairment loss. The correct term is what? Impairment loss. So from now onward, we'll never say provision for doubtful debt. Up to CA Inter chalta hai. But now onward, we'll never call it provision for doubtful debt, because it is not a provision only. When I say provision, provision means what? Ind AS 37, and Ind AS 37 says provisions are liability. However, AS 29 also says provisions are liability only. But leave whatever you have done in CA Inter, leave it. You passed now leave it. Now let us come to CA final. So can you say now we'll never call it provision for doubtful debt? We'll call it, a better word is what? Allowance for bad and doubtful debt. We should create some allowance for bad and doubtful debt, but will not call it what? Provision. Understood? Have you understood? So for financial asset, this impairment loss will be covered under Ind AS 109. Ind AS 109. Correct? Have you understood? This much. Only for your understanding I am writing provision for doubtful debt is not a correct term as provisions are covered under what? Ind AS 37. Only for your understanding. This much you understood? There are some other asset also, but for other asset we'll discuss in our later classes. I think this much you have understood. There may be some other asset, biological asset. There are many other assets also, but right now I don't want to discuss about that particular assets. This much you understood? So what I have done right now, I have just given a correct picture of provision and contingent liability in your life. This much you should do where in CA Inter. But in CA Inter, this much detailed discussion was not done. But it was required from examination point of view, from syllabus point of view. But then also you passed because it was not required from examination point of view. Understood? But this much explanation will be required at CA final level, because they will give one case study. You need to apply in that case study the particular concept. Then only you can answer. Understood? Correct. If you understood this much, can I ask one question to understand whether you have understood or not? Okay. Apply your common sense. Whenever I am asking question, apply your common sense. Most of the time you will feel that whenever you have some question have been asked, and if you apply common sense as a chartered accountant, when I am saying common sense, so you need to apply common sense acting like a chartered accountant. Think that you are C and answer it. 99% your answer will be correct. Means in exam hall, if you got some questions and you forget a concept, apply your common sense. Do it. Most of the time, whatever you are thinking, that will be correct. But normally what happens, we feel that we are not correct and we don't write. Normally when new questions come, you'll think that this question newly, we will not be able to answer, you will leave it. But I will say, don't leave it. Try to answer. Applying your common sense, whatever you have understood, just try it. Now, the question is that, you know about provision for depreciation? The provision for depreciation will come in first part ki second part? First part or second part? Provision for depreciation will come in first part, second part? Fast. You need to answer. Correct? First part, second part. How many are saying first part? How many are saying second part? Now first part. Majority is there. You change the answer. Huh? First part, second part. Everyone saying first part? Correct. Everyone is saying first part. Everyone. But everyone is not correct. Everyone is wrong. First thing, depreciation. Whether depreciation is due to conservatism? Depreciation is due to conservatism? Arey bolo yes or no? Please react. React fast. We are discussing about conservatism right now. I have written also that this is due to what? I have said now, whatever we are discussing, this we are discussing due to which principle? Conservatism. Whether depreciation is expected expenses arising from past event? Huh? Depreciation is for current year only. It is actual expense. Arey bolna re. Depreciation is not due to conservatism. Depreciation is due to matching concept. This is CA foundation concept which you have not done. You have done but not done in detailed way. Anytime come to my CA foundation class, you will find what is the difference. Therefore, no one learns CA foundation from me, because I teach everything, na? Correct? But can I say, whatever is the syllabus that you need to do at that particular point? Otherwise, what will happen? CA final will become heavy, and normally this is the reason the student who pass CA inter exam take multiple attempts in CA final. Student who pass CA inter exam, I say they are exceptional student. It is not easy to pass CA inter exam. But why they take multiple attempts? Because in CA inter they have passed most of the time with only what? Practice, or I will say rectification. But now if you do rectification, it will not work. Correct. So can you say depreciation is not due to conservatism? Achha, what is the meaning of depreciation? What is the meaning of depreciation? This to you know from CA, I will say from class 11 you are calculating depreciation. What is the meaning of depreciation? Depreciation does not mean decrease in the value of asset. Even though the value of asset increases, we need to depreciate it. Even though the value of asset increases, for example, you purchase machinery, the value may increase, the value of asset may increase or not, but then also depreciation is required. Bolo yes or no? So depreciation does not mean decrease in the value. It means this is not decline in the value of asset. Depreciation is systematic allocation of depreciable amount during its useful life of asset due to matching concept. Means we are allocating the cost price during the useful life of asset due to which concept? Matching concept. So depreciation does not mean decline in the value of asset. When I am saying decline in the value of asset, it is nothing but impairment loss. When I am saying decline in the value of asset, it means what? Impairment loss. Right now one new term I have given. Decline in the value of asset means what? Impairment losses. So depreciation is not decrease in the value of asset. So can you say provision for depreciation is maha incorrect term? Provision for doubtful debt chalta hai because it is nothing but from conservatism. But I say it is also not a correct term. Now at CA final level you will never use provision for doubtful debt. Lekin provision for depreciation? Provision, how it become provision? I hope you are understanding my intention. Since the provision for depreciation is not at all correct term, but then also ICI in their study material they are also using provision for depreciation. Means they also don't know anything. Means in CA foundation level and CA inter level, should we use provision for depreciation? No. Why you are using provision for depreciation? They also don't know. Okay, the correct term is accumulated depreciation. I think this term also you have used in accounting, accumulated depreciation. And if you read AS10 says accumulated depreciation. They have never said what? Provision for depreciation. Achha, have you prepared financial statement in your office? In your office, when you have prepared balance sheet, in balance sheet you have property, plant and equipment. For property, plant and equipment you will prepare one notes. In notes you will write down what? Provision for depreciation or accumulated depreciation? Accumulated depreciation. Why? Because that is prepared by a chartered accountant. CA will never use what? Provision for depreciation. I don't know why ICA is using. Are you able to understand? But we can't say anything about ICA is our godfather. Understood? Have you understood what I am saying? So can you say provision for depreciation? So we should not use only. If you want to write down for your understanding, write down provision for depreciation is not at all a correct term. The correct term is accumulated depreciation. Means provision for depreciation is not covered under this discussion, whatever I am saying. Provision for doubtful debt is covered in this discussion, but provision for depreciation will not be covered in this discussion, whatever we have done. Got it what I am saying? Yes, sir. If you have understood this much, then now we can come to India 37. Can we come to India 37? Let us come to India 37. Now it will become very easy for you to understand each and every part. Means if you know CA inter, CA final is very easy. But normally we don't know CA inter only. We don't know CA inter. We passed, but we don't know what we have done in CA inter. Suppose if you know AS 29 in such a detailed way, can you see it become very easy to explain what? India 37? Are you able to understand what I am saying? So CA final become complicated because of CA inter, and CA inter become complicated because of CA foundation, and CA foundation become complicated because of 11 12. 11 12 we have done entire rectification. I have asked one question, what is real account? Have you done the research? Real account? So anyone who have got the definition of real account, can you answer? Every batch I'll get this answer only. Every batch. This is Google Baba answer. Google Baba. I have never done search, but I have understood Google Baba. Correct? Google Baba or not? Same definition. Every time in every batch I'll get this only. I don't know from where this definition come. You are saying any account which has closing balance is real account. You are saying this na? Are bolna re? So personal account does not have closing balance. Personal account does not have closing balance. So yes or no? Personal account will have also closing balance. Yes, nominal account, expense and income does not have closing balance. But personal account has closing balance. Real account has closing balance. So why for real account they said any account which has balance at year end become real account. So what is personal account? Huh? Real asset means all asset all liabilities are real account. Huh? What is real account? Real account means I am answering because I know you will not find it anywhere because you don't refer ICA book. In CA Foundation, we have never touched our ICA study material. If you want to get correct definition of real account, just see what ICA study material. Real account means all asset of business except debt. That means receivable. Except receivable, because receivable of what? Personal account. Any debtor is what? Personal account. So all asset except receivable are what? Real account. Liabilities are not real account. Liabilities will be always what? Personal account. All liabilities are what? Personal account. So real account means all asset except debt. That means receivable. So all types of receivable will be what? Personal account. Apart from that, all asset of whatever nature will be always what? A real account. This is the correct definition. Understood? If suppose you're junior, after becoming CA, you become CA and they ask you what is real account, and if you are not able to explain, so it does not look good na. So what I want to say, I don't want to say that you should become expert in every subject. It is not possible also. But can I say whatever you are learning, you should learn in a correct way. Real account was the basis, it was base of what? Accounting. Base of accounting. If you don't know the base of accounting, how can you write accounting exam? Correct? Yes, sir. So forget it. This in my class, I will correct you from each and every aspect. Don't worry. I know what you know, I know what you don't know. Now coming to provisions. We are now starting India's 37th provisions. What is the meaning of provisions? Provisions are what? Now we have understood provisions are liabilities. Because provisions are liabilities. No doubt about it. So all provisions are liabilities, but all liabilities are not provisions. Now we need to understand what is the meaning of liability. If I am saying provisions are liability, will you give me? No. You need to ask me what is the meaning of liabilities. Means till we understand the meaning of liability, we can't understand the meaning of provisions. So provisions are liability. But liability of what? Uncertain amount or timing. Either the timing of payment is not known or amount of payment is not known. Either a timing of payment is not known or amount of payment is not known, or both are not known, of uncertain timing or amount. Simple definition. Provisions are liability of uncertain timing or amount. So when you were saying certain in the last class, I think many of you said provisions are certain and contingent liabilities are uncertain. Okay, that was 100% not correct. Bolna yes or no? The provisions are uncertain only. Either it is uncertain amount or uncertain timing. Correct? Or both. Amount. What you are saying? No, amount can be estimated. It does not mean it is certain. No. I am saying it can be estimated whether it becomes certain. You have created a provision by taking umbrella whether rain will fall. Rain may not fall. Even though you are taking umbrella, because there is a high chance of rain, whether rain will fall. If rain is not falling, you will not use umbrella. As per current circumstances, there is a high probability of rain. It does not mean rain will fall, na? Are bolna re? As per current circumstances, you don't know the amount. Uncertain, but you can estimate it. How to estimate, that is another discussion. How to estimate, that is another discussion. So when we can estimate, it does not mean it is certain. Means when you created provision, it does not mean the loss will happen. Loss may not happen. Loss may not happen, but right now there is a high chances of loss. But it does not mean it will always happen. Are you getting what I am saying? Have you understood? So it is uncertain timing or amount which we can estimate. If you cannot estimate, you cannot recognize provision. Simple. So it means, can you say provisions are liabilities of uncertain amount of timing which require measurement by substantial degree of estimation. Means the uncertain amount of timing can be estimated by substantial degree of estimation. How to estimate, that is a separate point. Means how to measure such amount of timing, that is a separate point, but it can be estimated. When I am saying it can be estimated, it does not mean it is certain. When I am saying it can be estimated, it does not mean it is certain. Understood? Correct. Now what is the meaning of liabilities? What is the meaning of liabilities? So liabilities are what? Present obligation arising from past event. So it is a present obligation arising from past event. Which obligation? Which obligation? Present obligation. Which obligation? So liabilities are arising from means, can I say all obligation on balance sheet date are not liability? All obligation on balance sheet date are not liability. Only present obligation on balance sheet date is a liability. So what is present obligation? That we need to understand. So obligation and present obligation are two different terms. So when I am saying liabilities are present obligation arising from past event. So what is the meaning of present obligation? Present obligation means what? It is probable. Means the obligation is probable on balance sheet date. Means chances are more than 50%. So when I am saying present obligation means what? Chances are more than 50%. So can I say when I am saying chances are more than 50%, it will also include 100%. When I am saying chances are more than 50%, it means it will include 100% also. When chances are 100%, that is also present obligation. When I am saying liability may be certain or uncertain. When I am saying certain, it is not a provision. When I am saying uncertain, it becomes what? Provision. Are you able to understand what I am saying? Are bolna re? So liabilities are present obligation arising from past event. What is the meaning of present obligation? Present obligation means any past event is deemed to give rise to present obligation if it is what? Probable. If it is probable. Probable means what? It is more likely than not. More likely than not means what? Chances of occurrence is more than chances of non-occurrence. Means chances of occurrence of loss is more than chances of non-occurrence of loss. Chances of occurrence is more than chances of non-occurrence. Correct? If chances of occurrence are more than chances of non-occurrence, it is probable. Have you understood? So what is the meaning of liability? Liability means present obligation arising from past event. Correct? Which will be settled through outflow of resource. Which will means for future tense. So settlement will be done in future. It will be settled in future only. So which will be settled through outflow of resource. Outflow of resource. When I am saying resource means asset. Asset will include cash. Asset will include what? Cash also. So which will be settled through outflow of resource. Which will be settled through outflow of resource. Have you understood this point? Have you understood this point? Are you able to understand what I am saying? Correct. So what is the meaning of liability? Right now I am asking you the definition of liability, not provision. Liabilities are present obligation arising from past event which will be settled through outflow of resource. Let me take some example. Correct. When I am saying simple example, debentures. Debentures are liability or it is not a liability? So we know debentures are liability. So you have not applied definition right now. You are saying liability because till now you have done debentures the liability only. But now apply definition first. Yes, it is a liability, but apply definition. Okay, debenture is a present obligation arising from past event. Once you have issued debenture, there is a condition that it will be repaid after 5 year, 10 year, 15 year. Correct. So of course there is a present obligation arising from past event which will be settled through outflow of resource. Therefore debentures are liability, no doubt. But when I say redeemable preference share capital, redeemable preference share capital is capital or liability? Redeemable preference share capital is a capital or liability? When I am saying capital, capital means equity. So there is a difference between equity and liability. Equity will go top, liability will come after equity in balance sheet. So there should be clear distinction between equity and liability. So my question to you, redeemable preference share capital is a liability or capital? Liability or capital? Everyone saying liability because you have applied what? Definition. But in CA inter what you have done? CA inter redeemable preference share capital you have done liability. Where you have shown in the balance sheet? In CA capital only na? Arre? In CA inter you have shown redeemable preference share capital in CA capital or liability? Arre nalayak. When I am saying balance sheet, this is balance sheet. So here we write down asset. Here what we write? No, it is equity and liability. What is accounting equation? Accounting equation is what? Liability is equal to asset or equity plus liability is equal to asset. So these are not liability. These are what? Equity and liability. Bachpan mein you have done accounting equation na? So why you are saying this is liability? Because bachpan mein you have written liabilities only. That was not correct. Whatever you have done in bachpan, that is or rectification. Your teacher said liability. You are saying liability because of that reason. That is rectification na? Arre bolna re. Just try to understand what I am saying. What is accounting equation? Equity plus liability is equal to asset. Means in this side you write down equity and liability. My question to you, redeemable preference share capital will come in equity or liability? Now it will, what you have done in CA inter? But that was not correct. Means whatever you have done in CA inter, now it is going to change in CA final. It does not means what you have done in CA inter, that is wrong. CA inter you have done as per AS and as per division 1 of schedule 3 of Companies Act. I said in my first class that entire accounting is going to change. Understood? Have you understood? So if you apply definition apply redeemable preference share capital. Can you see it is a present obligation arising from past event which will be settled through outflow of resource and therefore it become what? Liability. When I say irredeemable preference share capital, irredeemable preference share capital, suppose there is a preference share capital which is not redeemable, quite possible, bolo yes or no? There can be some irredeemable preference share capital. Batao, liability or it is capital? It is equity, because can you say it will not be settled through outflow of resource. It will not be settled through outflow of resource. It is as simple as equity share capital. It is as simple as equity share capital. Correct. When I say compulsory convertible debenture, compulsory convertible debenture means debentures will be compulsory converted into equity shares. My question to you all, compulsory convertible debenture is a liability or it is not a liability? Not a liability. Now you started applying definition. Understood? It is not a liability because there is no outflow of resource. There is no outflow of resource. Understood? Liability you understood? Liability. Have a detailed discussion once again about this redeemable, irredeemable preference share capital, compulsory debenture will do in a separate chapter. But to this extent, have you understood? To this extent, have you understood? Because in this chapter, we are not discussing about liability. We are discussing about provisions. So our main concentration will be on provisions. So provisions are liability of uncertain amount of liability. Means whenever liability require estimation, it become what? Whenever liability require estimation, it become what? Provision. Whenever liability require estimation, it become provision. Whenever liability does not require any estimation, it is not a provision. It is only liability. Means simple, all provisions are liability, but all liabilities are not provision. Have you understood the definition part? Correct? Have you understood definition? You can see how much time I am giving to definition. This is 2 minutes in CA inter, more than 1 hour in CA final. More than 1 hour. I have given more than 1 hour. Huh? From last class I am discussing this only. So this much detailed discussion we are going to do. Correct? This is the first chapter. Only we have started. So I am going to kill you. If you will not concentrate in class, if you will feel sleepy in class, then I am not wrong in that part. Come with fresh mind. Come with what? By drinking tea and coffee. If you are feeling hungry, you can eat in class also. But don't sleep in class. Because a lot of concept will be taken in the class. But if you can understand each and everything in class, so it will help you for revision. It will help you for revision. Correct? Yes. Now, one thing we have understood, whatever discussion we have done, key obligation, present obligation should exist on balance sheet date, which arises from past event. But case all obligation will not exist on balance sheet date. So in this chapter only we are discussing about those obligations which exist on balance sheet date. Correct? Now we are discussing only about those obligations which exist on balance sheet date. Correct? Understood? So any obligation means any event which giving rise to that obligation on balance sheet date, that event is known as obligating event. In this chapter, that event will known as what? Obligating event. Means obligating event will give rise to obligation on balance sheet date. Correct? Means those past events which give rise to obligation on balance sheet date are known as what? Obligating event. Means from this chapter you need to first find out whether there is any obligating event. When I say obligating event, means it gives rise to obligation on balance sheet date. Means any obligation which do not exist on balance sheet date, we are not discussing about that. We are not discussing about that. If that obligation become present obligation, then we should think about provision. That obligation may not be present obligation, then we will not think about provision. Present obligation you have understood. When obligation is probable, then it means what? It is a present obligation. Correct. Now these obligations are of two types. These obligations are of two types. This obligation, which obligation which is arising from past event. So we are not discussing about any obligation which arises from future event. Are we able to? Only those obligations which arises from past event and existing on balance sheet date. These obligations are of two types. One is known as legal obligation, one is known as constructive obligation. This constructive obligation is a new term in your life, because AS 29 was silent regarding constructive obligation. AS 29 was silent regarding constructive obligation. So it is a new term in your life. What is legal obligation? Legal obligation means any obligation which arises due to some contract or any act or any other legislation. Correct? Means any obligation which arises due to contract or legislation or any other obligation of law, that become legal obligation. For example, right now we have done one contract. We have done one contract that I will teach you, you will learn from me. Can you say in a contract both parties will have some obligation? In any contract, I have one right and I have one obligation. You have also one right and you have also an obligation. What right I have? Right to receive consideration. What right you have? Right to receive services. What is my right? Right to receive. What is your right? Right to receive service. What is my obligation? Obligation to provide services. What is your obligation? Obligation to pay the amount. So my obligation is to provide services, whether it is outflow of resource. No. So this obligation will not meet the definition of liability. It is outflow of what I am providing services. There is no outflow of resource. But in your case, there is an outflow of resource. So if you have not paid, you need to create a liability or not. Correct? Have you understood what I am saying? So can this obligation arises due to some contract? Due to some contract, or it can be income tax payable. If I am saying income tax payable, that arises due to some act, or GST payable arises due to some act. So any obligation which arises due to any contract or any legislation or any other law will be a legal obligation. Normally, can I say we recognize legal obligation? I think no discussion required for legal obligation. But sir, what is constructive obligation? Correct. Right now we have done one contract that I will teach you, you learn from me, and you need to pay a fees of this amount. This is a contract. But suppose during the classes I have made one announcement. I have made one announcement that any student who is scored 90 or 90, more than 90% marks in FR in the exam conducted by ICI, I will refund 50% of fee. This announcement I have made, and this is the announcement I am making. For you also it is applicable. Any student who has taken classes from me is my student, who is score what 90% or more than 90% in FR exam conducted by ICI, I will refund 50% of fees paid by you. Correct? Have you understood? My question to you all, any legal of any contract, this is not a contract because I have announced but you have not accepted. This is not a contract. Whether there is any legal obligation, it is not a legal obligation. But whether there is any constructive obligation, yes. It is because I have done some public announcement or any announcement. Correct now. So I am bound by this statement. I am bound by this statement, means any student who passed and scored 90% will come and I have to refund the fee. Bolna yes or no? So this become constructive obligation. Ind AS 37 says that you should also apply Ind AS 37 to constructive obligation. Means if there is a constructive obligation, then also you should create provision if all the conditions are satisfied. If all the conditions are satisfied. Understood? So what is the meaning of constructive obligation? Constructive obligation derives from entity's own action. My own action. It arises from entity's own action. It may be due to past practice. Suppose in last batches I have refunded the fees. So can I say you have some valid expectation in your mind? Sir, in this batch also you have some expectation even though I have not announced it. Correct? In last batches if I have refunded to, in this current batches I should refund? Bolna yes or no? Either due to past practice or any published policies. Suppose in website I have just given one policy कि normally I refund the fees if you score 90% or more than 90%, published policies or any specific statement in the class I have done. So it may be either due to past practice or published policies or any specific statement which indicate that entity will accept the responsibility. Of course, when I have done announcement, it means I will accept the responsibility. Correct now? And it created a valid expectation on the part of other party. Once I have announced, you said, oh, maja aayega. Bolo yes or no? So some valid expectation in your mind or not? Are you able to understand? It means it become a constructive obligation. It means it become a constructive obligation. Have you understood? Have you understood? Now suppose I'm just giving one good example. Suppose you started one factory, and whenever you will start factory, so of course you will pollute the environment. Correct? And there is no act on cleaning the environment. Normally in India we do not have such type of act. In metro city there may be some act. So there is no act of cleaning up the environment. So you are polluting. But in website, you have done in your website or in any statement you have announced whatever that will clean up the environment. In your website is mentioned that whatever pollution we are creating will clean up. So can I say it become a constructive obligation to clean up the environment, even though there is no legal obligation, even though there is no contractual or legal obligation? In that also you need to create what? provision if all the conditions are satisfied. Got it? Have you understood? Yes, sir. So now you have understood obligation. Obligation means what? Can be legal obligation or constructive obligation. Got it? Now coming to point number C, recognition of provision. When to recognize provision? If all the three conditions are satisfied. There are how many conditions? Three conditions. If all the three conditions are satisfied, you should recognize provision. These all three conditions have been taken from this definition only. Let us read one by one. There must be present obligation arising from past event. Present obligation. Which obligation? Can you say it can be either legal obligation or constructive obligation? So now whenever I am saying obligation, obligation can be legal obligation or constructive obligation. Correct? So this obligation can be either legal or constructive obligations. Got it? So there must be present obligation arising from past events. Second condition is what? Outflow of resource which is required to settle the obligation is also probable. Whenever I am saying probable, probable means chances are more than 50%. Means outflow is also probable. Outflow must be also probable. Correct? Third condition, a reliable estimation can be made for the amount or timing of obligation. Of course, estimation can be made. If you can't estimate, how can you pass journal entry? For journal entry, amount is required now. If amount cannot be estimated, you can't recognize it. The third condition is deemed condition. Third condition, deemed condition. Now for journal entry, you require amount, and amount means either actual amount or estimated amount. Either actual amount or estimated amount. If you can't estimate, means disclose it as what? Contingent liability. Have you understood? So again, this three condition is understood point from definition. From exam point of view, if question is silent, always you should assume that estimation can be done. Means if suppose some questions has been given without third point, so then you will say no provision will be created because amount is not given. No. From examination point of view, if even the question is silent, always assume that estimation can be made. Estimation can be made. Understood? So that is a deemed condition now. Otherwise, so you will never create provision. Understood? Correct. So point number 3, I think only a discussion is required how to measure, how to estimate. Correct. But one doubt will come, sir. Point number 1 and 2. When I am saying present obligation means obligation is probable. Means obligation is probable, then outflow is also probable. So one doubt will come, what is the difference between point number 1 and point number 2? When I am saying present obligation means what? Obligation is probable. Are bolna rahe? And point number 2 is what? Outflow is probable. Now one doubt will come, sir, what is the difference between point number 1 and point number 2? When I am saying obligation is probable, it means chances of occurrence of that event is high. Are you getting? So occurrence is probable. Once occurrence is probable, you will think about whether outflow is also probable. Means can you avoid payment? If you can avoid payment, then you can't recognize provision. So both conditions need to be satisfied. It is quite possible that there is a present obligation, means occurrence is probable, but then outflow is not probable. If outflow is not probable, do not recognize provision. Have you understood? Have you understood? Have you understood? So what is the first condition? There must be present obligation arising from past event. Second condition, outflow is also probable. Third condition, a reliable estimation can be made. Correct? Now, of course, you are thinking about point number 1 and 2, sir. Give some example. You are thinking or not? Yeah. So I know what you are thinking, what you are not thinking. Correct? So wait till I complete. Wait. Till I complete. Wait. Don't think much, because once you start thinking now, you will not listen me. And I can understand from your face that you are thinking something. Arey, ye kya ho gaya? Don't wait. Understood? So point number 1 and 2, you require one example. Let me take one example of CA Inter. This example, whatever I am taking, this type of question have been asked at CA Inter level also, by ICI only. And you must be aware about this example, because every teacher will teach this example. Suppose you purchase one aeroplane. You remember this example? Aeroplane. for commercial purpose. Suppose Air India purchase aeroplane for commercial purpose, not for your personal. Correct. Now, as per National Aviation Act, whatever aeroplane you are using for public transportation require rehauling expenditure after every 2 to 3 years. Means let us assume 3 years. After 3 years, it require rehauling. Rehauling means you can say major inspection. Means it need to be inspected. It need to be inspected after every 3 years. Major inspection. When I am saying major inspections, it means each parts of aeroplane need to be inspected, and it will not be small amount. If you inspect each part of aeroplane, it will be a heavy cost, heavy expenditure will be incurred. Let us assume that after 3 years, because you are in this industry, you know how much inspection cost will arise. So right now you have purchased, means right now it is 1/4/2022. After 3 years, an expenditure of 5 crore will be incurred for major inspection. Means amount can be estimated. Amount can be estimated. Understand what I am saying? It is a legal obligation. Legal obligation. Should we create provision? Should we create provision? Yes or no? Should we create provision means on the balance sheet date of first year, 31st March 2023? Because provision is normally created at year end. Are you getting what I am saying? Should we create provision? No. Future event. Why it is future event? There is a present obligation arising from the purchase only. Once you purchase, there is a legal obligation of rehauling expenditure in future. Outflow of resource will happen always in future only. What is the meaning of liability? There is a present obligation arising from past event which will be settled in future through outflow of resource. Of course, it is arising from past event. Past event means once you purchase, it become an event or not. You purchase one aeroplane from commercial purpose. Now due to legal act, you require some rehauling expenditure. For that expenditure, outflow will happen in future only. It is not based on future event. Bolo yes or no? So whether now should you create provision? Everyone saying yes sir or no sir? Yes sir. It means enter me, you have not done this example. Then what is certain here? Huh? Who said certain? Huh? First, let us apply condition. Whether first condition satisfied or not. You need to apply conditions. Don't think without applying Ind AS 37. One by one. Whether there is a present obligation arising from past event? Yes. Correct. First condition satisfied. Whether outflow is probable. Can you say we can avoid payment by selling this aeroplane? Follow yes or no? We can avoid payment by selling this aeroplane or we will not use it. It is given that yes, after every 3 years inspection is required, but only when you reuse it. Nah. If you don't reuse it, whether that expenditure is required, no. Means this expenditure is dependent on future conduct of business. This expenditure is dependent on future conduct of business. It means outflow is not probable. If outflow is not probable, we will not recognize provision. Understood? It means second condition is not satisfied. Second condition not satisfied, there is no requirement of any provision. So what Ind AS 37 says, everyone? What Ind AS 37 says? Only those obligations which exist independently only those obligations which exist independently from entity's future conduct of business should be recognized. Means any obligation which is dependent on future conduct of business should not be recognized as provision. Why? Because can I say in that case outflow is not probable. Outflow is not probable. So what they have said, in other words, obligations which are dependent on future conduct of business should not be recognized as provision because outflow of resources is not probable. However, it can be disclosed as contingent liability. It can be if all the conditions of contingent liability are satisfied. So it may be disclosed as contingent liability. Have you understood? Let me take one more example for better clarification. This example you have understood? All these examples are mentioned in your question bank through illustrations only. Means when you read the question bank now, you can see question bank concept based example is given. So these examples I have taken from these examples only. These all examples are given in ICA study material. Understood? So once you have done classes, if you read this example, everything will come in your mind. But all examples I will not take in class. There are some examples you need to read by your own. Because I can't take all examples now. Can I take all examples? No. Understood? Have you understood? But let me take one more example. Suppose you are doing some accounting work, accounting and tax work. Means you are a chartered accountant and you are doing accounting and tax work. So you have many employees. You have many employees who do accounting and tax work. Correct. Now what happened? There is some amendment in Act. There is some amendment in Act. Suppose GST was introduced. Before GST there was some other act, VAT and service tax, that was deleted, a new act introduced. When GST was introduced, okay, this employee required training about this. So one new act introduced. Now because of that new act, some training is required or not? Without training, now they cannot do tax work. So there is a past event, announcement, yeah, enactment of act. Because of that enactment, training is required, and if you train, some expenditure will happen in future. Some expenditure will happen in future. So there is a present obligation arising from past event or not? First condition is satisfied. Bolo yes or no? There is a present obligation arising from past event. My question to you all: will you create provision? Amount will be amount. I said is deemed condition. If I have, suppose we can estimate anything, Ray. I can estimate your life also. If you give me a chance, I can estimate your life. Correct now? The estimation, if question is silent, always assume that it can be estimated. Are you able to understand? Let me give amount of training will be suppose 5 lakhs. Understood? Should we create provision? Follow. Whether second condition is satisfied. Can I say this also depend upon future conduct of business? We may hire new employee. Bole yes or no? We may hire new employee or not. If you hire new employee or any expert employee, training is not required. Bole yes or no? Means you may retrench this employee and you may hire new employee. Quite possible or not? It means, can I say it is dependent on future conduct of business? Because it is dependent on future conduct of business, therefore provision is not required. Simple. Two best example I have given. Understood? Have you understood? Therefore, for this training expenditure will not create any provision. It does not mean first condition was not satisfied. Yes, there was first condition. There was a present obligation arising from past event, but outflow of resource was not probable. Outflow of resource was not probable. Understood? Have you understood? So I hope this point now you have understood. Point number D you have understood. Come to point number E. Point number E is very simple. Can I say every obligation will involve other party? Obligation involve other party na? But it is quite possible that you don't know the identification of that other party. If there is an obligation which is payable to some party, but you don't know which party, then also India 37 says recognize provision irrespective of identification of that party. So even though you don't know the identification of other party, recognize provision. Correct only. Understood? Next point. Point number F. Legal obligation arises only when legal obligation. We are discussing on legal obligation. Legal obligation arises only when legislation are enacted. That means act is enacted on balance date, or it is virtually certain, take one correction, on reporting date, make one correction. Legal obligation arises when act is enacted, or it is virtually certain on reporting date that it will be enacted in short time. It will be enacted in short time. Means after balance date. It will be enacted after balance date. But it is virtually certain on balance date, reporting date. Virtually certain means what? Chances are more than 95%. Chances are more than 95%. Correct? So either it is enacted on balance date, it is virtually certain on balance date that it will be enacted. It will be enacted within a short period of time. Correct? Now this short time has not been defined. See how much time? It is a matter of judgment. Understood? Means what they want to say, let us understand. Suppose this is 31st March. Correct? Reporting date. Correct? And suppose act is already enacted on reporting date. Case 1. Act is already enacted on balance date. Correct? Suppose act of cleaning up the environment. Means you have a factory, you are polluting the environment, and there is already one act which is enacted on or before 31st March for cleaning the environment. So there is a legal obligation. You should create provision or not? You should create provision. It means, can I say act is enacted, so provision is required? Provision is required. If all the other conditions are satisfied, means of course all conditions need to be satisfied. Case number 2. Act is not enacted, but it is virtually certain that it will be enacted. Understood? It is virtually certain that it will be enacted. Can I say in India, if any bill is passed in both the houses, you have understood? The bill is passed in both the houses, so it is virtually certain that it will be enacted. Can I say the signing of president is only a formality in India? बोले तो even though that bill is not signed by president, it is not till now notified in the official gazette of India, but if the bill has been passed in both the houses, so it is virtually certain that it will be enacted. Correct? So virtually certain, when it will become virtually certain, that has not been defined under India's 37. It is a matter of judgment. But again, in these circumstances, whatever I have said right now, it is virtually certain that it will be enacted. Understood? Don't worry from exam point of view. In exam, they will mention that it is virtually certain that it will be enacted. If it is virtually certain, what you will do? Can you say 1 second provision is required? Provision is required. Case number 3. Neither case 1 nor case 2. Have you understood? Means neither act is enacted, nor it is virtually certain that it will be enacted. Correct? But there is constructive obligation. Quite possible. Constructive obligation. There is a constructive obligation, means there is a published policy of cleaning up the environment. So will you create provision? Yes, if all other conditions are satisfied. So case number 3 also, what? Provision is required. This is 100% expected question. This type of question they will ask in exam. Don't think that CA inter type of question they will ask. In CA final they will ask this type of questions. Have you understood? In this case also provision is required. Case number 4. Neither case 1, case 2, case 3. Means case 1 is not existing, case 2 is not existing, case 3 means there is no constructive obligation also. Then provision is not required. Then provision is not required. Correct now? Then provision is not required. Understood? Means there is no obligation only. There is neither legal obligation, there is no constructive obligation. The question of obligation, the question of provision will not arise only. When I am saying there is no case 1, there is no case 2, there is no case 3, so there is no obligation only. The question of this chapter means this chapter is not applicable only. Correct now? Understood? I think this is giving better understanding. This also you have understood. With this we completed the definition of provision. Definition of provision is completed. Any doubt in this? Now if you have any doubt you can ask me. Follow. Any doubt? No doubt? Correct. Now once you have understood provision, it will not take much time for contingent liability. Correct? Means now you have understood that we are discussing about obligation. Which obligation? No. When I am saying obligation, which is arising from past event. Correct na? Arising from past event. Have you understood? Correct. This obligation can be legal or constructive, that also you have understood. It can be either legal or constructive. Or constructive. Got it? Now we have understood this obligation can be present obligation. So obligation can be present obligation. or it can be possible obligation, a new term in your life, or it can be possible obligation, or it can be remote obligation. Remote obligation. Understood? When I am saying present obligation means more likely than not. MLTN means what? More likely than not. More likely than not means what? Chances are more than 50%. Means chances are more than 50%. Means obligation is probable on balance sheet date. When I am saying remote obligation means chances are less than 5%. When I am saying chances are less than 5%, so can I say insignificant chances? When I am saying insignificant chances, so as per materiality concept, we should ignore it. So what India 37 says that whenever there is a remote obligation, then no treatment required. No treatment required. We should ignore it now. As per which concept? Materiality. We all know about materiality. No treatment required. Ignore it from accounting point of view. When I say ignore, to ignore for contingent liability means no contingent liability will also not be disclosed. It will be ignored for accounting only. Correct. When I am saying possible obligation means what? Not more likely than not. Correct now? Not more likely than not. Correct. Means I can say chances of non-occurrence will be more than chances of occurrence. Means as percentage we can say it is what? Less than 50%, but more than 5%. This is known as possible obligation. Possible obligation. Now my question to you all, if there is a present obligation arising from past event, what we should do? When there is a present obligation arising from past event, what we should do? Bolo? I'm not understanding what you are saying. Whenever there is a present obligation arising from past event, what we should do? Create provision. Everyone is wrong. Till now you have not understood. Till now you are in CA Inter. There are two more conditions. There are two more conditions. All present obligation will not be recognized as provision. Correct? There are two more conditions na? Are bolna re. So can you see there are two more conditions also? First is about outflow. Second is about estimation. Correct? Can you see if these two conditions are satisfied? If these two conditions are satisfied, then India 37 says recognize provision. Recognize provision. Correct? Have you understood? But there can be a situation that when there is a present obligation arising from past event, but either outflow of resource is not probable or amount cannot be estimated, or both conditions not satisfied. Quite possible or not? Means can I say either these or these not satisfied? So in this case, what India 37 says, disclose it as what? Contingent liability. So it will become contingent liability. Are you able to understand what I am saying? Have you understood? Contingent liabilities. And all possible obligation arising from past event will be what? Disclosed as contingent liability. All possible obligation arising from past event will be disclosed as what? Contingent liability. Simple. With this flow chart, I hope entire definition is clear. Entire definition is clear. Have you understood? If someone asks you right now, what is the meaning of contingent liability? Can you frame the definition? Follow. Contingent liability means what? Contingent liabilities are, point number one, present obligation arising from past event which cannot be recognized. Why? Which cannot be recognized because either outflow of resource is not probable or reliable estimation cannot be made, or point number 2, it is a possible obligation arising from past event. Definition completed. Can you say we can frame definition in our own word if we know the concepts? If we can frame definition, now I think you will never forget. Can you repeat with me? What is the meaning of contingent liability? Contingent liability means present obligation arising from past event which cannot be recognized. Why? Because either outflow of resource is outflow of resource is not probable, or amount cannot be estimated, or it is a possible obligation arising from past event. Understood? Correct? Let's see what the definition is given. What is given? Contingent liability. Contingent liabilities are present obligation from past event which cannot be recognized because either outflow of resource to settle the obligation is not probable or reliable estimation cannot be made, or it is what? Possible obligation arising from past event. If you write this much, you will get marks. But let us complete it. Possible obligation arising from past event, the existence of which will be confirmed by happening or non-happening of uncertain future event which is not wholly within the control of entity. This also we know. But can I say, from exam point of view, if you write on all possible obligation arising from past event, you need to recognize what? You need to disclose it as what? Contingent liability. So if you write on this much only, you will get marks. Means from exam point of view, now what you are writing, that is important. When you are writing, you should write on the keywords. In this definition, what are the keywords? You only say, can I say present obligation? This is keyword, this is keyword, and this is keyword. If you write all these 4 keywords, you will get marks. If you are not writing this keyword, you will not get marks. Means suppose you substitute possible obligation with a different name, a different terms, you will not get marks. So keywords is very important from exam point of view. Examiner will just check whether we know the content of Ind AS 37 or not. They will not see the grammatical language. Means even though there is a grammatical mistake, they will give marks. Are you getting what I am saying? Simple definition or not? Simple definition. Contingent liability, whether it will be recognized. Whether we recognize contingent liability? No. So can you say understood, not recognized but required disclosure in the financial statement. When I say required disclosure in financial statement, can you say financial statement consists of balance sheet, statement of PL, statement of cash flow, statement of changes in equity coming soon in your life, and notes to account. So when I say disclose where? Notes to account. So when I say disclosing financial statement, it is always what? In notes to account. In notes to account. Understood point? Correct? So all contingent liability will be required disclosure in financial statement, that is in notes to account, unless outflow of resource is removed. Like if outflow of resource is removed, then ignore it. If outflow of resource is removed, means chances are less than 5%, then ignore it. Then ignore it. Understood? Correct? Disclosure, can I say disclosure require nature of event, means you need to give a description of event, and the effect on financial statement, means what is the estimated amount, means by what amount it may affect financial statement. But if the amount cannot be measured, in this case, then a fact need to be given that we are not able to measure the amount. Means can is the contingent liability required disclosure even though it cannot be measured? Contingent liability required disclosure even though the amount cannot be measured. Means contingent liability is required disclosure if it can be measured, if it cannot be measured. Bolo yes or no? Understood. But provision will recognize only when the amount can be measured. Got it? Have you understood? Have you understood? Means can I say in this way? Can I say in this way? Obligation present possible. Measured, cannot be measured, measured, cannot be measured. Quite possible. So, if there is a present obligation, let us assume outflow of resource, that condition is satisfied. Okay, that I am assuming. So in the first case, it will be provision. In second case, disclose it as what? Contingent liability. In third case, disclose it as what? Contingent liability. In fourth case, also disclose it as what? Contingent liability. Understood? Have you understood? Got it? Yes, sir. With this, meaning of contingent liability is also over. Let us complete the meaning of contingent asset, then I will take break. Let us complete it. Or you want break? Complete or you want? Chalo, let us take break. Can we start once again, everyone? Now, so before break, we have done the definition of what? Provision and contingent liability. Now let us come to the meaning of what? Contingent asset. Now, once you have understood contingent liability, you can easily understand contingent asset. So contingent asset means what? When I say asset, so there is a inflow. Inflow means possible inflow. Correct? Understood. So can I say contingent asset a possible asset? Possible asset arising from what? Past event. Possible asset arising from past event, the existence of which will be confirmed only by occurrence or non-occurrence of uncertain future event which is not within the control of entity. Means can I say all possible asset arising from past event will be what? Contingent asset. All possible asset arising from past event. So you can see if I am saying liability. So for liability, they have said present obligation and possible obligation. But for asset, they say asset or possible asset. Asset or possible asset. Are you getting what I am saying? So all possible asset arising from past event will become what? Contingent asset. Correct. Now for accounting treatment, when I am saying asset, we should think about inflow. Whether the inflow is probable or not probable. Whether the inflow is probable or not probable. So when I am saying recognition and disclosure, so we should think about inflow. So what Ind AS 37 says that if inflows are virtually certain, when I say virtually certain means chances are more than 95%. So what they are saying, if inflows are virtually certain, then it is not a contingent asset, it is an asset only. So recognize it as what? Asset. There is no need to disclose it as what? Contingent asset. So when it is virtually certain, what is virtually certain? Inflows are virtually certain, then it shall be recognized as an asset, not treated as contingent asset. Understood? Means if inflow are certain, then no doubt. If inflow are certain, then it will be an asset. Doubt will come when inflows are virtually certain. So if inflows are virtually certain, means chances are more than 95%. Then also it will be recognized as an asset. Let us take a very simple example. Means from the Bachpan. Bachpan means from class 11. We are doing such type of entry. Means when I am doing this journal entry, debtor account debit to sales. Debtor account debit to sales. Means you have recognized one asset. My question to you all, you have done one credit sales. Credit sales. So whether it is certain, whether the recovery is certain. Whether recovery is certain. How you can say certain? You have done some credit sales that customer may die. Are bolna yes or no? You can't say 100% certain. Just try to understand what I am saying. When I have done credit sales, you have done one journal entry, debtor account debit to sales. You have recognized one asset now. But whether it is certain, whether the inflow is certain, no. Inflow is not certain. Whether it is uncertain, it is also no. Means it is virtually certain. Because you have made sales to known customer. Can I say normally we will not do credit sales to unknown customer about which we don't know about the financial capability? Correct now. So if you have done credit sales, you know that customer, therefore you have done the credit sales now. So it means it is virtually certain and therefore you have recognized as an asset. But we can't say debtor means it is 100% certain. Are you able to understand? Okay, this is the best example of this particular case. From the Bachpan we are doing this journal entry. Have you understood this point? So whenever inflows are virtually certain, it will be always recognized as an asset. If the inflows are probable means chances are more than 50%, but now in this case less than 95%. Correct now. So it is, if it is probable but not virtually certain, if it is probable but not virtually certain, then it will not be recognized as an asset. It will be treated as contingent asset, and once it is treated as contingent asset, it's the facts to be disclosed in financial statement. So disclose it in financial statement means notes to account. However, if you see AS29 used to say contingent asset will be disclosed in director's report, if you remember. Remember that point? As per AS29, the contingent asset will be disclosed in the report of approving authority. Director's report. Can you say bakwas? What is this? Director's report? Director's report is not a part of financial statement. Director's report is not a financial statement. When I am saying AS or Ind AS, AS and Ind AS applies to what? Financial statement. So why you are disclosing in director's report? If you want to disclose where? In notes to account, or don't disclose. Correct now. So that was bakwas. That is corrected in Ind AS. Whatever disclosure if you want to give in notes to account only. So to disclose in notes to account. Difference between AS29 and Ind AS 37. But if it is not probable, so for asset means for inflow, what they are saying, no treatment required. Means can I say Ind AS 37 is strict for the recognition of asset due to conservatism principle only? Due to conservatism principle only. Understood? So if it is not probable, no treatment required. Have you understood? Means if I give a summary for this, just try to understand summary. Outflow, inflow. When I am saying 100%, it becomes certain. So in this case, it is a liability, it is an asset. When I am saying more than 95%, means virtually certain. So can I say in this case, it is a provision only. But provision means liability only. I can write down liability now. Liability. It is an asset. But when I am saying more than 50% but less than 95%, it is also probable. In this case, provision means liability, but in this case, it is a contingent asset. Are we able to understand this point? Correct. When I am saying less than 50% but more than 5% means not probable. It is not probable. Then in this case, contingent liability, but in this case, no treatment. And when I am saying remote means less than 5%. In this case, no treatment. I think this summary will give you more understanding, clear understanding. Have you understood this point? Got it? Yes, sir. Now coming to measurement. Now measurement is very simple. From exam point of view, so if I will take 2 questions over. Now how to measure? Is whenever I am saying measurement, so it should be the best estimate. Means whatever estimation you are doing, it should be the reasonable estimation, reliable estimation. So what Ind AS 37 says that you should do best estimate of what? Expenditure required to settle the obligation. Required to settle the obligation at the end of reporting period. Correct. Means you need to estimate what? You need to estimate what expenditure which is required to settle on which date? At the end of current year reporting date. Means what they want to say, everyone. Just try to understand. Suppose this is 31st March. Correct. And there is a present obligation. And all other conditions are also satisfied. So you need to now do measurement. Correct. So can I say you do 2 measurement. One is timing measurement, one is payment amount measurement. Correct. So suppose now you know that the amount is payable after 3 years. And the amount of payment is 10 lakh. Means after 3 years, how much amount will be paid? 10 lakh. Now how this 10 lakh is measured, that you don't ask me right now. Suppose management estimated that after 3 years, 10 lakh is the amount which is payable. Correct? Understood? My question to you all, what amount of provision will be created? Apply your common sense. Have you understood the question? Once again I read. What they say, it is the best estimate of expenditure which is required to settle the obligation at the end of reporting period. Means how much amount will be settled on this date only? On 31st March, na? On 31st March 2022, let us assume. So what you will do? Can you say this 10 lakh is future value? But you want value as on this date. So what you will do? Can you see you will do discounting? Correct now. So you will discount this amount. And you will find out present value. Present value. Okay, the present value of this 10 lakh will be the amount of provision. Will be the amount of provision. Have you understood? Third difference. Ind AS 37 says discounted amount. AS 29 says undiscounted amount. AS 29 says 10 lakh. Ind AS 37 says present value of 10 lakh. Understood? Have you understood this point? Correct? Got it? Yes, sir. So I hope you have understood what they want to say about this particular point. It should be the best estimate of the expenditure which is required to settle the obligation at the end of reporting period. But sir, how will do this best estimation? Means how to estimate? How to estimate? To Ind AS 37 says that you need to rely on management judgment. Whatever management is saying, that is only the best estimate, because they only knows how much expenditure is required to be made. Correct? Means the estimation are determined by management judgment. Determined by management judgment. Means case this information will be given in exam only, because you can't expect what is the management judgment. So all information will be given in exam only as per the what is the expectation of management. Correct? So it should be determined based on management judgment. But what Ind AS 37 says that the judgment should be supported by some evidence. Supported by some evidence. So what does it need to be supported by? Either experience of past transaction, or a report of an expert, or any additional evidence provided by event occurring after reporting date. This is nothing but AS4, event occurring after balance sheet date, which is nothing but Ind AS 10 coming soon. Means after Ind AS 37 we'll do Ind AS 10 only. Means this third point I will explain under Ind AS 10. Is it understood? Whatever judgment you are forming, that judgment should be supported by either past transaction, experience of past transaction, or report of an expert. Either take the report of an expert. Understood? Means for example, I have done announcement that whoever scored more than 90% mark, I will refund 50% fees. So can I say, as per the past batches, I will say that out of 100 only 5% students score 90. So I will create for this current batch 5% of student only. Are you getting what I am saying? That is what, based on my past experience. Understood? Have you understood? Correct. So can you say how to make best estimate? You understood? The third question arises, how to do measurement, how to calculate the amount. Now this measurement is based on two conditions. How to measure? What Ind AS 37 says that when obligation involve large population, I mean just try to understand. I have done an announcement. So suppose there are 100 students, so this become large population. So can I say I can't do one-to-one relationship now. Whether you will score, this is not practically possible. Practically impossible. So in this case, when obligation involve large population, then what will do? And when obligation do not involve large population, correct? Then what need to be done? Are you able to understand what I am saying? So when obligation involve large population, so Ind AS 37 says determine expected value of obligation. Expected value of obligation, this is keyword. Expected value of obligation. Determine what? Expected value of obligation. That is nothing but weighted average of all possible outcomes. Weighted average of all possible outcomes. Correct? Weighted average of all possible outcomes. Now, what is this weighted average of all possible outcome? Let me take one example. Everyone, suppose this is one year 2022-23. Correct? in this year you have done sale of 1000 units, sale of 1000 units, correct, with, let us assume, 2-year warranty. 2-year warranty, correct, understood. Now if you have done sale of 1000 units, large population with 2-year warranty, means if suppose any defect occur, so you have an obligation to, what, rectify that defect. So if you have an obligation to rectify that defect, there is an outflow of resource which will happen in future. Are you able to understand? So can India 37 applicable? If all the three conditions are satisfied, you should create a provision for warranty. Are you able to understand? So of course you should create provision for warranty, but how to measure, now we are understanding, correct. So can I say it will depend upon either past transaction or report of an expert. Normally this type of case depends upon past transaction. So can I say, let us assume as per management, based on the past experience, some information will be given in the question. And as per the information given in the question, it is given that 60% customer will come with no defect. Are you getting what I am saying? 30% customer will come with minor defect. And 10% customer will come with major defect. This is based on past experience, correct. Now they need to estimate what will be the outflow in case of minor defect and in case of major defect. So that information will be also given the question based on past experience, correct. So they have given that if there is no defect, then of course no expenditure. If there is a minor defect, then the expenditure may be rupees, let us assume 1000, and if there is a major defect, the expenditure may be 2500. Understood? So what will be the amount of provision? What will be the amount of provision that we need to understand? So can I say amount of provision will be expected value of obligation. Value of obligation means weighted average of all possible outcome. So can you see it will be out of 1000, how much no defect? 60% no defect. 60% no defect, amount is 0. Bole yes or no? Plus out of 1000, how much minor defect? 30%. What is the amount? Rupees 1000. Are you able to understand what I am doing? Plus out of 1000, how much major defect? 10%. What is the amount? Amount is 2500. Understood? So this become how much? Can you give me the amount? If you have calculator, can you calculate it? Bolo? Don't have calculator? They bring calculator. This is accounts class, not law class. I know. Exam also you'll forget. First, what is the amount? Total 5 lakh. I'm assuming it is correct, huh? 5,50,000. Correct only, na? So can you say this become what? Expected value of obligation. But this is the undiscounted amount. Correct. Of course, can you say we should also calculate present value of this? Then it become the amount of provision. Correct. So this is undiscounted amount and provision will be discounted amount. So we should find out what? Present value. If the rate of interest is given, you can discount it. The rate of interest is given, you can discount it, na? Correct. Understood. If in exam rate of interest not given, ignore discounting. Got it? Very simple. Same question have been asked in exam. Then lollipop question. Lollipop question or not? Arey bolna. The same question is asked in exam, lollipop or not? But believe me, students are not able to write properly because they are not revising properly. In class, everything will be simple because I am with you. But in exam, first this is paper 1. Paper 1 means 8 subject is in your mind. Yes, paper 1 means 8 subject na. And out of 8 subject in there's 37 you need to process it. And if you can't process it, this will become difficult. Correct? So consistent revision required. If you can revise it, very simple. If you forget, you can't retain it, then difficult. Got it? Second, this point you have understood when obligation involve large population. Second, when there is a single obligation you understood? Single obligation in bracket item with two possible outcome. Two possible outcome. What they are saying, if there is only two possible outcome, so for two possible outcome we never do average. Whenever there are more than two outcome, then only we'll go for average. I think in statistics you know about this fact. For two we never do average, but for more than two always we go for average. When they are saying when there are two possible outcome, most likely outcome will be the amount of provision. Most likely outcome will be the amount of provision. The provision will be created based on what? Most likely outcome. This is the keyword, most likely outcome. Have you understood? Let me take one question. However, this type of question has not been given in ICS study material. Means ICS study material they have given this question, but till now they have not given this question based on the second point. But let us understand. Suppose on 31st March, one case is pending in High Court against company. Have you understood this point? One case is pending in High Court against company. Have you understood? Now I am giving you two situations. Case 1, case 2. Correct? Case 1, case 2. Means as per expert means lawyer. Correct? They said 70% chance of low damages. Amount is 2 lakh. And 30% chance of what? High damages. Means if the case is decided against company, this much compensation is payable. Correct now? So this is what, suppose 10 lakh. Okay, it is a single obligation. Single obligation with two possible outcome. Whenever two possible outcome, you will take what? Most likely amount. Most likely outcome. Most likely outcome. So in this case, the amount of provision will be equal to what? Amount of provision will be equal to 2 lakh. And of course, it should be discounted. Means if what is given, rate of discount is given, you can discount it. Have you understood? Correct? Have you understood? This is known as most likely outcome method. But if I say case number 2, they have given 60% chance of low damages, 2 lakh, 20% chance of high damages, 10 lakh, and they are also giving 20% chance of no damages. Correct now? Nil amount. Quite possible. So in this case, there are three possible outcomes. Whenever three possible outcome, you will not go for most likely amount. Now you need to go do what? Weighted average. So in this case, provision will be equal to what? You only say. It will be 2 lakh 60%. 2 lakh into 60% na? Plus 10 lakh into 20%. Correct. Will be equal to what? How much? Lakh. 3 lakh 80,000. Correct. So this will be the amount of provision. Have you understood? Simple. Easy. Understood. Let us come to the next point. 3 lakh 20,000. My mistake. 3 lakh 20,000. Now correct? Okay. Understood. Now there are some small point. Point number D. This is understood point. Provision should be measured before tax. Of course, it should be measured before tax, means it should not be net of tax. Why? Because provision is charged against profit before tax. So the amount of provision should not be netted with tax. It should be before tax. Amount of provision shall be present value of expenditure if the effect of time value of money is material. If the effect of time value of money is material, then discount it. If the time value of money is not material, then you can ignore it. Normally, can I say if the amount is payable within 1 year? Normally, I am saying if the amount is payable within 1 year, so can I say the effect of time value of money is not material? So we will not discount it. If the amount is payable after 1 year, so we say the effect of time value of money is material. But this is what? A matter of judgment. Sometimes when an amount is payable within 6 months, it can be also material. It is a matter of judgment, I am saying. From exam point of view, can I say whenever they have given rate of discount, discount it. Whenever they have not given rate of discount, ignore it. Simple. Means in exam, discounting is possible only what is given when rate of discount is given. So from exam point of view, the rate of discount is given. Discounting, rate of discount is not given. No discounting. Correct? Correct. But I hope you have understood point number 2. Correct. Then discount rate should be pre-tax only. Discount rate should be pre-tax. It should not be post-tax. It should be pre-tax. Then last point, gain from expected sale of assets shall not be taken into account for measurement of provision. Means while you are creating provision, so any gain from sale of assets should be ignored. Means gain from sale of asset will be covered in some other chapter. Means when I am saying gain from sale of asset can be PP, property, plant and equipment. So this gain will be covered under Ind AS 16 now. This will be covered under Ind AS 16. So what they want to say that any expected any gain from sale of assets should be ignored while calculating the amount of provision. Means you should not consider that gain while calculating the amount of provision. Understood? Got it? Correct. Now, point number E. Risk and uncertainties. Risk and uncertainties. Just try to understand. I don't know whether it is important or not important from exam point of view. But then also I need to explain. Just try to understand whatever estimation right now we have done, that is based on past experience. But the amount is payable in future. So can I say it may be affected by some uncertainties in future? Correct now? There may be some uncertainties in future. So what Ind AS 37 says that whatever amount you are estimating, that should be given the effect of that risk and uncertainties also. Means you should also consider the risk and uncertainties which surround that transactions. Correct? Which are which are surrounding that transaction or event. And because of that risk and uncertainty, some adjustment is required while calculating the amount of provision. How to make such adjustment, that we need to understand. How to make such adjustment, that we need to understand what they want to say. The risk and uncertainties that surround that surround many events and circumstances shall be taken into account in reaching the best estimate of provision. In simple word, we should consider the risk and uncertainties. Correct. A risk adjustment should be made for the amount that the entity would pay in excess of expected present value of outflow due to uncertainty attached with the actual outcome. Means whatever present value you have calculated, that amount of actual payment may be in excess of that expected amount. So therefore we should do some risk adjustment. How to make that risk adjustment, that we need to understand. So what they are saying, risk adjustment can be accounted in any of the following three ways. Any of the following three ways. Let me explain with this example. We have taken this example. Correct. So how to make risk adjustment? Suppose this information is based on past experience. Correct. But there will be some risk and uncertainties in future. So how to make a risk adjustment? Correct. Are you able to understand? So either can I say will increase the outflow. Either you do some adjustment in this amount. Because this was 1000 based on past experience. But expenditure will happen in future now. So this may increase or not. This may increase. So either do some adjustment in outflow. Correct. Or can I say this present value, whatever present value you have calculated, this present value should be increased directly. Whatever present value you have calculated, increased by some amount. Correct. Or can I say whatever rate of discount you have taken, should be adjusted. Rate of discount should be adjusted, or you do some adjustment in rate of discount. Either of these can be done. Either of these three can be done for giving the effect of risk and uncertainties. Correct. Means in exam, one of the ways will be given. They will say increase the outflow by 5%. So you will do 1000 plus 5%, 2500 plus 5%, and then make the weighted average. Or they will say increase the present value by 10%. So you increase the present value by 10%. Whatever is given, that you will do. Have you understood? So what Ind AS 37 says, now you will understand with this example. Risk adjustment can be done in the following ways: by adding it to expected present value of future outflow, or by adjusting the estimate of future outflow, or by adjusting the discount rate. Don't worry, all information will be given in the question. Only to apply it. Simple. Correct. Understood. Let me take one question. Good question, so that you can feel that yes, I am taking some question also. Question number 20. Very good question, but simple. Mariko has an obligation to restore environmental damage in the area surrounding his factory. So has an obligation. So it can be legal obligation or constructive obligation. It can be any one of the obligations. We are not supposed to think about that, because they have said they have an obligation. Okay, thank you very much. Correct. Yes, sir. Expert advice indicate that restoration is carried out in two distinct phases. The first phase requiring expenditure of 2 million, 2 million is 20 lakh, to remove the contaminated soil from the area, and the second phase commencing 3 years later from the end of first phase to replant the area with suitable tree and vegetation. They need to do some plantation, etc. The estimated cost of replanting is 3.5 million. Marico uses a cost of capital before taxation of 10%. So we want pre-tax only, and they are given pre-tax. Thank you very much. And the expenditure when incurred will attract tax relief of company's marginal tax rate of 30%. So whether you will consider tax rate? No, can I say this is Bakwas point? Right now you have done the chapter, so you know everything. But in exam, if they have given tax rate, you will be confused. Why they have given tax rate? And normally when we are confused, you apply. Correct now? Understood now? So this point can be dangerous in exam hall. Marico has not recognized any provision for such costs in the past, and today date is 31st March 2002. The first phase of the cleanup will commence in a few months' time and will be completed on 31st March 2003, means after 1 year from balance sheet date, when the first payment of 2 million will be made. Phase 2 year cost will be paid 3 year later from the end of first phase. From the end of first phase, calculate amount of provision as on 31st March 2002 for the restoration cost. Question is very simple, correct? But normally when we don't read the question carefully, we can do mistake. When we don't read the question, right now I am reading and this is not exam hall. First I am reading and this is not exam hall. In exam you read and there will be exam pressure. Correct now? Because there will be time limit. The same question in exam hall can be dangerous if we don't read it carefully. Correct? Means whenever, from my point of view, any questions come which is given in para format with lot of dates, always try to prepare one timeline while reading the question only. Means while you are reading, just draw it. Question number 20 we are doing. Right now current date is what? 31st March 2002 na? 2. After 1 year it will be 31st March 2003. Then this is 4, this is 5 and this is 6. Correct. We are standing at this point of time. Means we need to find out the amount of provision as on this date. What is the amount payable as on this date? 2 million. And after this 3 year, what is the amount payable? 3.5 million. Understood what I am doing? Now, what will be the amount of provision? You will say year end. 31st March 2003, 4, 5, 6. What is the outflow? How much outflow? This is 20 lakh. This is nil, and this is 35 lakh. Are you able to understand what I am doing? Now you need to find out present value factor at what rate? 10%. And then you need to find out present value. Understood? Now, discounting, you are expert. I am not here to explain the discounting. Correct? Now just try to understand. One doubt will come, sir. We'll do discounting by taking present value factor of how much decimal. Means, of course, you will take present value factor. How to calculate present value factor, you know. From my point of view, either you should take 3 decimal or 4 decimal. Better you take 4 decimal. So in class, always will take 4 decimal. But you can also take 3 decimal. Whatever decimal you are taking, write down. Write down. Have you understood what I am saying? Whatever decimal you are taking, write down. If you are not writing, they will not be able to understand how much approximation you have done. Correct? So can you give me 4 decimal? 0.9090, then 0.8269, Calculator rate. Eight to six, one na 4. Then 0.7513. Then 0.6830. Now you can calculate this amount. You can calculate this amount. Have you understood? Have you understood this point? This calculation I am not doing. I am just giving the presentation part. Suppose in exam they have given discounting factor with 2 decimal. Can you use 4 decimal? Never. They will deduct marks like this. So if they have given discounting factor 2 decimal, 3 decimal, 4 decimal, 5 decimal, 9 decimal, use that decimal exactly in exam. But if the question is silent, then calculate by using 3 decimal or 4 decimal, whatever decimal, but whatever decimal you are using, just write down. Got it? Got it? This point I will not repeat every time, because now accounting become discounting. In every chapter we'll do discounting. Understood? Correct. This much you have understood. Simple question. Simple. This to amount you can calculate na. Because they have used 3 decimal na. Now you can't do magnification key for this question 3 decimal, for other question 4 decimal. So either you take 3 or 4, your choice. But whatever you are using, write down. Got it? This also you have understood. Correct? Point number E understood. So how to do measurement you have understood. Got it? Now it means almost India is 37 completed. Almost. But there are 4 special points. These 4 special points once I complete, India 37 is over. This 4 special point is actually a point of common sense. Now if you have whatever we have done, if you apply that, these points are very easy. Correct? So right, what I will do, this special point I will discuss as a case study. You need to say what need to be done in that special circumstances. Means suppose a questions come and you forget this special point, you apply your common sense and do it. Correct. First special point is what? Reimbursement. Reimbursement means what? If whatever expenditure will be incurred in future to settle the obligation for which you have created a provision. Means for provision means what? Any obligation arising from past event which will be settled in future through outflow of resource. So for that expenditure you have created provision if all the 3 conditions are satisfied. But whatever expenditure will be incurred, that might be reimbursed by third party. So if it will be reimbursed by third party, now 2 questions will arise. Whether provision is required. First question, if required, what will do about reimbursement? Okay? 2 questions arises. 1 second, please. 1 second. Don't read. Don't read. If you read, interest lost. If you read, interest lost. I am just creating an environment. If suppose questions come, you forget this point, you can apply your common sense. Correct now? Reading will not do anything. Read, you can read in your home also na. My help is not required for reading. Correct? But once you read, what happened? Interest loss, because answer is given na. Are bolna re. Then you are not applying your brain. You should use your brain without reading. 1 second. What I am saying? What is the topic? First let us understand the topic. Expenditure will be incurred for any obligation for which we have created provision. If that expenditure will be reimbursed by third party, 2 doubt will arise. If it will be reimbursed by third party, whether we should create provision? What is your answer? Whether we should create provision? Let us take one example. Correct. Let us take one example. If some legal case is pending, and if we lose the case, then there is a compensation payable 5 lakh. So one of the director has given commitment that we reimburse the amount. Director is a separate person other than company. So first payment will be done by company and then it will be reimbursed by directors. Now question arises whether the company should create a provision. Yes or no? Yes, these two are two different transactions. Expenditure is different transaction, reimbursement is different transaction. अरे बोलना expenditure is outflow and reimbursement is inflow. Are you able to understand? If it is reimbursed, okay. When it will be reimbursed, we'll think. First, we'll think about expenditure. Now, if all the three conditions satisfied, should we create provision or not? So, if entity there is a legal case pending, you should first find out whether there is a present obligation. Yes. Outflow is probable. Yes. And reliable estimation can be made. Yes. Provision required. So, even though it will be reimbursed by third party, then also provision is required. Understood? Now, if provision is required, you can create provision whatever we have discussed on that basis. Now about reimbursement. Reimbursement become inflow. So what you will do about reimbursement? You only say. Hello? Reimbursement become inflow. So what you will do about that reimbursement? Asset. You recognize an asset? No, asset. You, no. Just apply Ind AS 37. Whatever you have done. Don't apply CA Inter now. Don't apply CA Inter. Apply if the reimbursement is virtually certain. Bolo na. If reimbursement is virtual, we have done na. Now do whatever we have done. Now don't say as per CA Inter. Correct na. So if the reimbursement is virtually certain, recognize it as a separate asset, means reimbursement asset. And if it is probable, then it should be disclosed as contingent asset. And if it is not probable, then no treatment required. Same thing is given. Understood? Are bolna re? So can I say we have done whatever we have applied, whatever we have done? So this special case, you need to apply whatever we have done till now. Correct? So what they want to say? Reimbursement means when expenditure is required to be settled, is expected to be reimbursed by third party. This third party can be insurance company. This third party can be insurance company. Understood? What they said, if reimbursement is virtually certain, means chances are more than 95%. Correct? Chances are more than 95%. What they are saying, recognize reimbursement as a separate asset. As a separate asset in balance sheet. Means you can't set off with the amount of provision. Means in balance sheet, write down provision separately and reimbursement asset separately. So it will be recognized as a separate asset in balance sheet. You can't set off with what? The amount of provision. Understood? However, in SOPL, such amount is set off against the amount of provision and the net amount is shown in PL. Means in PL, net expense will be shown. Means in SOPL, what you will do? In SOPL, the amount of provision will be reduced by what? Reimbursement asset, and the net amount will be shown as an expense. This is SOPL, huh? And the first one is what? Balance sheet. So in balance sheet, it will be recognized as a separate asset, but in SOPL, net amount will be shown as an expense. Correct? Can you see in any case, reimbursement assets should not exceed the amount of provision? Either it will be equal to the amount of provision or less than the amount of provision, but it should not exceed what? The amount of provision. Understood point? Understood point na? So amount recognized as reimbursement assets should not exceed the amount of provision. Understood? Have you understood? These all special points are very important from exam point of view because question may be asked from these special points. First, understood? If it is not virtually certain, so either it will be probable or not probable. Correct? Not recognized as an asset means do not recognize such reimbursement as an asset in balance sheet. Correct? But if the inflow is probable, expected reimbursement should be disclosed in notes to account as contingent asset. As contingent asset. Understood? Have you understood? Bolo. Simple. Simple now. Let me take one question. Question number 8. What is given? X Beauty Solution Limited is selling cosmetic product under his brand B, but is getting his product manufactured from Y Limited. It has an understanding with Y Limited that if the company become liable for any damages claim due to any injury or harm to the customer of the cosmetic product, 30% will reimburse to it by Y Limited. There is an understanding. Understanding means, can I say, if I am saying there is an understanding, so understanding means there is a contract. Bolo yes or no? There is a contract now. So there is an understanding means contract. Can I say contract can be oral also, which is enforceable by law? Are bolna yes or no? So from this understanding word we can understood, yes, there is a contract. Bolo yes or no? Means legal binding is there. So there is a binding contract. Are you able to understand what I am saying? Each word is important from examination point of view. 30% reimbursed to it by Y Limited. During the financial year 2001-2002, a claim of 30 lakh demanded by the customer for X Limited Beauty Solution Limited. How should X Beauty Solution Limited account for the claim that become payable? My question to you all, if they say claim is demanded, so of course can I say there is a present obligation arising from past event? Outflow is probable, amount can be estimated. We should create an amount of provision, but we should create an amount of provision of 30 lakh or 70% of 30 lakh. 30 lakh. So we should create a provision of 30 lakh. Now coming to reimbursement. Reimbursement is 30% of 30 lakh. How much? Reimbursement is 30% of 30 lakh, means 9 lakh. So should we create a asset for this? Should we recognize an asset for this? So guys, when I am saying understanding means binding contract. It is virtually certain. It is virtually certain that reimbursement will be made. So if it is virtually certain that reimbursement will be made, it should be recognized as a separate reimbursement asset of an amount equal to 9 lakh. But in SOPL, how much expense will be recognized? 21 lakh. Understood? Simple question. But if you can retain this point, then only you can write down. Very simple. Super simple or not. But if you forget, you will say 21 lakh amount of provision. Most of the student will say that only. Bolna yes or no? Most of 99% student will say what? 21 lakh. Because understood? Simple. But simple question or not? Simple. Coming to next point. Future operating loss. Future operating loss. I'll create one example. Don't read, please don't read. I am just reading heading. You are not supposed to read the content. Once you read the content, interest lost. I will create example. You apply your common sense. Chalega? Chalo. So I am just creating one example. So we are discussing about future operating loss. Suppose you have two factory. Factory 1, factory 2. Correct? Factory 1 is a profit making. Factory 2 is loss making. Correct? Understood? Now, loss making, and what you have estimated in the future 2 year, there will be an operating loss of 20 lakh. Means you have estimated that if you continue factory 2 for 2 coming year, you need to incur a loss of 20 lakh. Understood? Example understood? This become future operating loss. Should we create a provision for this? Should we create a provision for this? Yes or no? Why no? It is not because of past event. Very good. Case it is based on future event. Till now you have not done business. Business will be done in future. So it is based on future event. So I will say Ind AS 37 is not applicable only. So for this future operating loss, you will not create any provision. There is no need to disclose contingent liability also. Correct? So I will say Ind AS 37 is not applicable only. So for any future operating loss, provision will not be recognized. Got it? Simple. Can we move? Can we move? Yes. Next point. Coming to executory contract. Do you know about executory contract? Contract act you have done. Executory contract means what? Any contract which is performed either partially by both the parties or not yet performed by both the parties. This is known as executory contract. Correct? Means which is not yet performed by both the parties. Obligation has not been performed by both the parties, or it is performed partially by both the parties. That is known as executory contract. Correct? Now one question arises, if there is some executory contract, whether Ind AS 37 will be applicable to that contract or not. Let me take one example. Executory contract. Suppose you have done one contract. You have done one contract to buy one plant or machinery, whatever, after 2 years at rupees 20 lakh. And the delivery will be given after 2 years. Payment will be also made after 2 years. Correct? My question to you, executory contract or not an executory contract? You have done contract right now that you will buy a machinery after 2 years at rupees 20 lakh. So can I say both party has not performed their part of obligation? One party has not paid the amount, other party has not delivered the machinery. So it become an executory contract or not? Yes. But there is a contract to pay how much? 20 lakh. Should we create a liability? Should we create a liability? Yes or no? Why no? Once again, this is not because of past. Machinery will be delivered afterward. 2 years. So can I say it is what? Future event, based on future event only. Therefore, Ind AS 37 clearly mentioned that Ind AS 37 is not applicable to what? Executory contract. Even though there is a contract, but we don't do accounting based on contract, we do accounting based on substance. Substance over form. Substance over form. You know about substance over form? The entire Ind AS is based on substance. Even though you have made one contract to pay 2 lakh, but can I say it will be payable only once machinery is delivered. So it is based on future event, and therefore Ind AS 37 is not applicable. Understood? So what Ind AS 37 says, that Ind AS 37 is not applicable to executory contract unless it become onerous. Unless it become onerous. So now we need to understand what is onerous contract. Means when this contract will become onerous. When this contract will become onerous, that I need to explain. Are you able to understand? Means once this contract will become onerous, what is applicable? Ind AS 37 is applicable. Correct? Understood what I am saying? Suppose the contract was done on 1/4/2022, and right now it is 31st March 2023, and the delivery will be done on 31st March 2024. Quite possible. 2 year हो गया ना? Now what happened? In this year only, management decided to change the production method. Change the production method. Understood now? Change the production method. Management decided to change the production method. Now because they have decided, means they have changed, not decided, they have changed the production method. Once they change the production method, now that machinery is no more required. Quite possible. Quite possible now. Now that machinery is no more required. Now just try to understand. When I am saying contract become binding contract. So whether it can be cancelled. Whether this contract can be cancelled. It cannot be cancelled. Just try to understand. Normally a contract are always non-cancellable contract. What is the meaning of non-cancellable contract? Non-cancellable contract are those contracts which can be cancelled upon payment of penalty. Because any contract can be cancelled. But non-cancelable contract are those contracts which can be cancelled upon payment of penalty. So when I am saying contract, it is non-cancelable only. And if you want to cancel, you need to pay penalty. But just try to understand, if it is a non-cancelable contract, means binding contract, but now we don't require this machinery. But after 2 years, machinery will be delivered and you need to pay what? You need to pay what? 20 lakh? Means can I say the cost of meeting that obligation is more than expected benefit from such machinery? Means benefit is zero now. Or you can sell it at a scrap value. Means even though machinery is delivered, that is no more of any use. Okay, the cost of meeting that obligation is more than the expected benefit from such contract. When this is the case, the contract become what? Onerous. The contract become onerous. So what Ind AS 37 says that once the contract become onerous, apply Ind AS 37 and calculate provision based on unavoidable cost. Means the amount of provision will be equal to unavoidable cost, the cost which you cannot avoid. That much provision should be created. Correct. So can I say in this case, what will be the unavoidable cost? You only say. Means what will be the amount of provision? Provision will be equal to lower of what? Point number A. What is the cost of meeting the obligation? 20 lakh. Minus, can I say, scrap value of machinery? Minus scrap value of machinery, if any. This is unavoidable cost. Or any penalty amount payable to exit from the contract. Means suppose in the under the contract it is written that if you pay 2 lakh you can exit from the contract, so you will pay 2 lakh, whichever is lower now, this will be the amount of provision. The amount of provision will be equal to unavoidable cost. Unavoidable cost will be lower of what? These two amount. Understood? Have you understood this point? Have you understood? Onerous contract, have you understood? Follow. Onerous contract, you have understood? Yes sir. Let us read what is given. Ind AS 37 is not applicable to executory contract unless it is onerous. In other words, it is applicable to what? Onerous contract. What is the meaning of onerous contract? Onerous contract are executory contract in which unavoidable cost of meeting the obligation exceed the economic benefit expected to be received from such contract. Can you say whenever we do any contract, always benefit is more than cost, then only we enter in the contract. For example, right now we have done one contract, so you are paying some fees and the benefit is more than that fees. Benefit is what? Infinite. Means when I am teaching, it is infinite benefit, huh? Correct? Bolna yes or no? If the benefit is less than the fees, will you come in my class? You will never come in my class. Now you will say bye bye sir. First day you only say bye bye, na? Bolna yes or no? So it means whenever we enter into contract, benefit is always more than what? Cost. Then only you have entered into contract. But sometime it happens that benefit is less than cost, it become what? Onerous. The day it become onerous, Ind AS 37 is applicable. Ind AS 37 applicable, calculate the amount of provision. How to calculate? In this case, the amount of provision will be equal to unavoidable cost, that is lower of cost of fulfilling the obligation, and penalty payable to exit from the contract. Got it? This also understood. I'll take some question on this, but not today. Correct? Can I continue? For another 15 minutes? Yes or no? Let us complete now. Have you understood this? So can I say 3 special points you have done? Reimbursement you understood? Future operating loss you understood? Executory contract you understood? The last special point, this summary you can read by your own. I'll come to this point, don't worry, huh? I'll come to this point. I'm coming to first special point, restructuring. 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 So there are four special points. Understood? First is what? Reinvestment. Second is future operating loss. Third is what? Executive contract, which become onerous. And last is what? Restructuring. What is the meaning of restructuring? Restructuring means any program which changes the scope of business. Which changes the scope of business. Correct? That is known as restructuring. For example, you have done amalgamation. Amalgamation is an example of what? Restructuring. Amalgamation, when we do amalgamation, means when we do merger, acquisition, etc., it will change the scope of business. So that is also one example of restructuring. When you have done internal reconstruction, that is also one example of what? Restructuring. So any program which changes the scope of business will be considered as restructuring. For example, I will take some more examples. For example, you want to close one factory. That is also what? Restructuring. You want to shift your location from one place to another place. That is also restructuring. Correct now? Are you getting? You want to discontinue one product. You want to discontinue one product. For example, I am teaching CA Foundation, CA Intern, CA Final. I want to discontinue CA Foundation right now. This is also restructuring. Correct now. So whenever we enter into a restructuring transaction, so can you say there will be some expenditure in future? So now one doubt will come, for that expenditure, should we create provision or not? Doubt, you understood? For example, let us take once again what they want to say. Everyone. Suppose this is 31st March. Now, here you decided, you miss management, huh? You miss management. Management decided to close one factory. I am saying close one factory. I am not saying close entire entity. Huh? If entity is liquidated, then no India's will be applicable. Then it is non-going concern. Nah? It become non-going concern. So I am saying one of the factories they have decided to close. One of the factory, not entire entity. Correct? So decided to close one factory. Understood? And this factory will be actually closed suppose at this point of time. It will be actually closed. Now when it will be closed, there will be some expenditure which is directly related to this closure. For example, when the factory will be closed, you need to pay some compensation to employee. So there are some expenditure which is directly related to such closure. Directly related to such closure, na? Correct? Understood? Now you have decided to, now doubt is coming, whether Ind AS 37 is applicable. If applicable, how to calculate the amount of provision? This is the question. Understood? Have you understood this point? My question, first question is that you have decided to close the factory. Whether on 31st March, because provision we create always on 31st March, should we create provision? Bolo, yes or no? Yes or no? Everyone, please think. You have decided to close one factory. Should we create provision? Yes or no? No? Yes. Yes or no? I'm just giving time. Either you say yes or no, but you say something. Huh? Don't be silent. In exam, suppose this question come, you write na or you leave it. In exam, you have two options. Please listen. Two options: do or do. You have two options: do or do. Do or do. There is no other option. Huh? So in exam, suppose these questions come, either you say yes or no. Means either your answer will be correct or wrong. But you don't decide. Who will decide it is correct or wrong? Examiner. You whatever you want to write down. Batao. Should we create provision on 31st March? How many are saying yes? How many are saying no? Those who are saying no, why? मजा आ रहा था. Please, whatever you have understood, say something, because I'm just inculcating one habit, that whatever you understood, try to convince the other party. You know what is the meaning of CA? CA are who? Who are CA? CA are those person who can convince anyone for any point, even though they are wrong. They can convince. They can convince. The CA. You come to me for any subject, even though I don't know, I will try to convince you. I will try to convince you. You know, have you go to office, so whether your CA knows all the works. अरे बोलना yes or no. Whether your CA, he don't know all the work, but any work will come, he will take. He will never say no. He will ask what? Please. He will learn and then do. Or he will transfer that to some other person. But he will never say no, na. These are chartered accountants. They will take all types of work. You want, I will do. Correct? Batao. Those who are saying no, can you give answer? No is correct. Just try to understand. When I am saying I have decided does not mean you are committed to it. Bolo yes or no? Let us take one example. Suppose I decided to marry one girl. So whether she will marry me? अरे बोलना रे. So should I create provision for expenditure, marriage expenditure? No, na. There should be commitment. Commitment with first proposal, then approval, then announcement to parents. Bolna yes or no? Even though she approve, suppose I propose, she approve, I will make announcement to my family person or not. If they give approval, then only marriage expenditure provision. So it means there should be some commitment or not. So Ind AS 37 says that just check whether on 31st March there is a commitment. If there is a commitment, so it means there is a constructive obligation for which provision should be created. So how that commitment will be checked, that we need to understand. How to check the commitment, that we need to understand. So what is it? If two conditions are satisfied, means entity is committed to such restructuring. If two conditions are satisfied, entity is committed to such restructuring. Understood? What are the two conditions that only I need to explain? Very important from exam point of view. What they are saying, it is a program which materially changes the scope of business. Understood? First point. For example, sale of a division. Division means one component, one business, not entire entity. Yeah? Termination of a division, closing down of a division, closing of a business location or relocation of from one place to another place. Correct? But when I am saying it is a program which changes the scope of business without affecting what? Without affecting what? Affecting GC. GC means going concern. Without affecting GC. If GC is affected, then it is not restructuring. Huh? If GC is affected, it is not restructuring. Are you able to understand what I am saying? Correct. First point you understood. Second point. A provision for restructuring costs is required when recognition criteria of provision are satisfied, means all three conditions are satisfied. First, second, third, three conditions. Correct. But can a first condition, there must be present obligation. Obligation can be either legal obligation or constructive obligation. In this case, always it will be constructive obligation. There cannot be legal obligation. Bolna yes or no? In this case, always constructive obligation. So what Ind AS 37 says, a constructive obligation for restructuring arises. A constructive obligation for restructuring arises when entity has a detailed formal plan for restructuring. Can you say we'll make detailed plan only when we are committed? You are doing detailed study. Why? Because you are committed to become CA. Otherwise, you will not come and you will not do detailed study, na? So just try to. Entity has a detailed formal plan of restructuring and means both the conditions need to be satisfied. Entity has started to implement such plan, means they have taken some action to implement such plan. For example, if they want to sell one division, so they have given one advertisement in newspaper for sale of division, means this will show their commitment. Correct? The entity has started to implement such plan or announce the main features of restructuring plan to those affected by it. Can you say, if I am doing announcement, it means we are committed. Means once I propose one girl and she accepted it, so I will do announcement in Facebook from single to mingle. Bole yes or no? In your Facebook it is single or mingle? Single only. Till chhod. I'm just kidding, huh? Okay. Entity has started to implement such plan and or announce such plan to those persons who are affected by such plan. So whenever announcement done, it means committed. Otherwise, we'll never do announcement. We'll never do announcement. So these two conditions, if both the conditions are satisfied, means there is a constructive obligation. This much you have understood. This much you have understood. The balance point will do tomorrow. Got it? Almost in days 37 completed. We'll take some questions. It will be completed. Okay. But today this much only. Thank you very much. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day.